So good afternoon, ladies and gentlemen. I'm Ritika, and it is an absolute pleasure to welcome all of you on behalf of Institute of Directors India to this very special 2022 Annual Directors Conclave. I think we can do better if we kickstart the afternoon with a good round of applause. Starting with our gold partners, Life Insurance Corporation of India, and our gold partner, Damodar Valley Corporation. Our silver partners, the Nasdaq Stock Market, National Association of Security Dealers, Automated Quotation Stock Market from USA. Also our silver partner, Delhi Transco Limited, our silver partner, Maharashtra Industrial Development Corporation. Our bronze partners for this conclave are CRISIL Limited and SAP Global Company, ESOP Direct, Avas Financials Limited, formerly known as AU Housing Finance Limited, Bajaj Alliance Life Insurance Company Limited, and our associate partners LIC Housing Finance Limited and Power Grid Corporation of India Limited. A round of applause for our partners for the conclave. So without taking any more time, we would like to quickly head into the opening session. To get it started, I would like to request President of Institute of Directors India, Lieutenant General J.S. Ahluwalia, to please join me on stage and receive the distinguished guests for the opening session.
Good evening, ladies and gentlemen. It's a great pleasure for me to welcome you all, distinguished guests, Mr. Yukin Sinha ji, and General Surendranath ji, who's the Vice Chairman of the Council of Institute of Directors, and IOD members, life members, and guests. It's a great pleasure to welcome you all. I know we are meeting at the Institute of such a convention after nearly 3 years. We've had a long distance. The COVID kept us out, though we kept meeting through webinars and kept a little distance which was required. But this is the first major meeting, annual meeting. We had a CSR conference here in June this year, in which some of you were there, and it was a great pleasure. So the theme, as she has mentioned already for today's, because first 3 hours, 4 to 7, we have kept as a professional talks, and 7 onwards, we will have a distinguished fellow awards celebration followed by dinner. So this is 4 to 7, 3 hours. We are going to have a professional talk for which we are all really more concerned with. The theme is, what are the top trends for the tomorrow's corporate boards? How are we going to build tomorrow's boards? What do they need? How can they be more effective? And what is really happening? We all want to know. We all want to be prepared for it. We are all directors or would-be directors, and we are all concerned that how can we prepare ourselves for those tomorrow's boards. So it is not something one-time thing. As you all know, corporate the directors, IOD has been spending a lot of effort in building directors. That means training. Basic thing is training, and also conferences. That is so that we can meet each other, we can share our success stories, our problems, what are we doing, how things are moving with us, and through contact, the business also spreads. So this is basically the 2 major areas, apart from various other aspects which IOD has to deal to keep its role very clear. So, among the roles, as you all see, I will go into more detail during the next session when we start at 7. But basically, we have number of, apart from the 4 regional offices who organize a number of conferences every year, we do have national conferences, we have international conferences. As you all are aware, we are doing 3 conventions abroad, global conventions, since 2003. That is, first was in London we started, then in Dubai and in Singapore. In London, for example, the next conference is from 9th to 12th of November. starting with a business lunch at House of Lords. And I mean, some of you will be there, I know, every time we've been seeing, and it has been a great woe to have the best of people coming from English-speaking countries like USA, Australia, New Zealand, and of course, England. All those, the top professionals will be there to share their experiences. That is why we have short speeches so that we can share each other's best points and move forward. It is more in contact, the networking, which is very, very vital. To come on the subject of today, a few words before I really, basically today's corporate landscape is vastly different. The last 3 years, or especially 2 years of COVID pandemic and digital transformation have further added on to these changes. Basically, the stakeholder engagement, disclosure, corporate governance, and corporate social responsibility, they have become vital part of our sustainability strategy. The success of the board is largely a function of the quality and diversity and experience of the board members. The board is nothing but board members. And what is required is the experience and skill of the directors. The directors have to add long-term value through a well-thought-out strategy. Independent directors are added value now, which is not an old thing. It was only started when Companies Act 2013 came up. Since before that, we did not really have independent directors, though they were abroad. But what role they will have, as far as our corporate and the government really is concerned, they expected that they will add value and bring balance in terms of diversity, knowledge, skill, and experience. They wanted them to be taking on hands-on thing, which is not easily possible. For a hands-on experience, they need to be just, today at an average, as you all know, independent directors are spending 5 hours with a company, 5 days with a company every month. Average monthly 5 days independent directors functioning. And remuneration we are giving to independent directors is also rather limited. So within this 2 things, it's not possible really for them to be able to do the total job. We are having a separate session also and discussion on this. We'll go about it. The emerging disruptive technologies and global business dynamics have also placed boards under pressure. The major corporate fiascos in the last 3 decades, as you're all aware, including Satyam, have placed the current boards in a fishbowl of public scrutiny. Everybody is looking, what is this board doing? So these boards, who are the members, who are doing, what are they doing, is a common thing which all of us are looking. So just like in a fishbowl, everybody can watch it. They are open, so they have to be careful, they have to do their duties properly. Global warming, environmentally damaging corporate activities have also disrupted all of us around the globe. Wildfires, floods, droughts, typhoons, corporate failures are increasing, occurring in multiple locations. As windows of opportunities narrow, because very soon we have to, as you all must be knowing that Prime Minister himself chaired a major meeting today in the afternoon, just before this, at about 1 o'clock news, I was hearing that the 16 ministries were joined together to look for how to be carbon zero by 2070, a meeting on their plan as to what is their roadmap. This meeting was being held there. So it's a very vital, we have to see where as the Prime Minister and the whole country is going, who is causing this? It is by corporates, by all of us. What are we doing about it? How are we moving into it? It's okay for them to set down certain goals, certain targets, etc. But it is extremely important for us also to get involved and see how we can cut down this carbon emission and bring it to carbon zero, the government's, as far as plans are concerned. The boards also need to prepare for the future. Now that's another aspect. Not to be left behind. In 1970, Alvin Toffler published a book called Future Shock. The strategic foresight is a systematic approach to look beyond current expectations, to minimize the surprises that may come up later. IOD has already set up a special cell under its board research and advisory division called Strategic Foresight Cell. Its main aim is to advise and train the corporate boards in this very vital area. We must keep looking forward. The board must see, not what it can just see. It must have a different way to look forward beyond what can be seen by the present data and other things available and what can be expected. This is very important, and IOD has taken it strongly, and we hope to be really useful to the boards as to how they should train their directors who can look forward beyond this, gazing forward. The multitude of social and economic problems that our society and as in India we face today cannot be solved unless we place these boards, corporate boards, at the heart of the change agenda. That is why we are all here. Independent directors are relatively, as I mentioned, new in India, but with high expectations from all government, SEBI, and corporates. They expect IDs to take a hands-on role, not a mere oversight role. The independent directors are expected to become increasingly crucial in advising management, in governance practices, and fair standards in the organization. However, mere average 5 hours per month, as I mentioned, will not do. Now, I come down to the characteristics as to what, very few I will, because you will be hearing them from various experts for the next 3 hours. I will just highlight a very few of them, that to what are the characteristics, what future boards may look like or needs to have to be more effective. Have a diverse board. That composition and diversity of its composition is the most vital. Not people who are from your family or relations or friends or old boys, school boys, things like that. So we need a diverse board composition with a balanced, domain-specific knowledge, skill, and experience, who are clear about what drives the value in the organization. I'll very frankly tell you, I have been meeting some of the independent directors. I said, what really creates value in your organization? And let me tell you that not more than 30% were very clear as to what really creates value in my organization, so that I focus it on that. I focus my efforts on that, in that direction. It's a very vital thing, and unless we understand what is adding value, so that is another important part. Then have a shareholder-oriented, because shareholder, they are the owners of the company. And we need the board directors really, they are not the owners, but they should have a owner's mindset to be able to do things what owners really expect them or want them to do. With no temptation to micromanage the organization. Now that's a vital. They must know when to partner, when to take charge, and when to stay out of the way. Now, for the independent directors, I mean, I have been on a few, so I know exactly these are very vital, important things. We should operate with calibrated optimism, with an appropriate safety net. We need new performance indicators with compensation and reward system. I will just tell you, see, as you all know, tangible and intangible. In 1970, the business tangible and intangible ratio was 70-30. Today, it is 30-70 or even less than that. That means it is not the balance sheet which is telling what the company's strength is or what the company's value is. If you take, say, Infosys, the book value and the market value, there is a difference of 6 times. So it is the intangible which is measuring. The merger of 200 companies and their complete relaxation as to what really made value, it shows that when they discuss how to merge what each company's value is, they found that 50% average of 200 companies I'm talking, 52% was just what they feel, how people look at them, what their values are. I mean, that's a very, very vital thing as to how the value as far as the word value, how people are looking at them, how people feel about them. So how they have earned strength, it is what their number is, what their main name is, and how their badge or things like that talk. So we have to be very careful. Things are changing. It is not just the balance sheet which is important, because balance sheet does not tell. Today, as I mentioned, tangible, intangible is only, average is 70-30. Coming to other, sensitize directors about, we need to sensitize directors now about ESG. This is an impact and its impact on the society. This ESG is really vital. We all have to understand properly. We have to have new things are coming out, new standards for ESG, so that our reporting and other systems are improved accordingly. We need to review corporate governance arrangements to move beyond just mere compliance. We need to confront challenges and seize opportunities to negotiate collaborative arrangements, have alternative strategies and plans for managing the fragility of global supply chains. Now that's another important, which during the COVID period, the supply chains affected us mainly. So they are fragile. We have to be very clear as to how we are moving it. We must identify new areas of growth in our own corporates, both organic and inorganic. Must have an open and clear whistleblower policy, build a cyber crisis ready board, and engage with stakeholders to identify. So this is main areas in which things have been moving. There are a number of them, and you will be going through them. I would not taking any more time. So wish you a very useful evening here today. Thank you.
Thank you so much, General Ahluwalia, for the welcome address. And now, ladies and gentlemen, it's time for a special address. Our next speaker brings with him over 4 decades of extensive experience in finance in various industry domains. A chartered accountant by profession, he joined RSWM in 2011 as the Chief Financial Officer. In a very short span of time, in the year 2018, he was elevated and given additional responsibility as the Joint Managing Director of the company, serving 2 years in this dual role. Not just that, he's also worked with prestigious organizations like Himachal Fibers, Clark's Group of Hotels, ITC Limited, NTDE Dubai, Gulf Trading Corporation Limited, and Kesar Enterprises Limited. He has an experience of nearly 33 years as head of finance in various companies across a myriad of industries. Please put your hands together for Mr. B.M. Sharma, Joint Managing Director, RSWM Limited, L&J Bhilwara Group.
A very good evening to you all. Many thanks to IOD, especially Mr. Kapoor. Thanks General Ahluwalia and my fellow panelists. Before I touch upon this very interesting topic of boards, of future, let me pause here for a second and take you back to the composition and functioning of the board, 20 years back. And then we talk about, what we look at the composition of boards and their functioning 20 years down the line. Well, have been witnessing, functioning and discussions in the boardrooms for the last 25 years. 25 years back, an independent director in the board was exactly like me, a lone person in this august lobby of IAS, IRS, and I am coming, from a corporate background, not from a civil background. The discussions in the boardroom used to be over probably in 2 hours or 2.5 hours time, and the agenda was very, very limited. If you see where we have come now in these 2 decades, that is also a pointer to where we are heading for, let's say, next 2 decades. The committees of the board, some, corporates are obliged to form, and some good corporates are making actually to facilitate, good governance and discussion, in the corporates. That is the phenomena now which we see, which was not there for 20 years back and all. In Bhilwara Group, I can share with you that independent directors were dominating even when it was not required, by legislation or by Companies Act or by SEBI regulations. And we have been having very healthy, you can say, mix of independent and promoter director. Always, it was 50-50 even 20 years back in case you see the composition of the board. Another key element with so many, you can say, people, from civil society, civil officers, here, there has been a change in their role and their approach also. 20 years back, actually, reaching out to a civil officer for any issue was a very difficult job. In 20 years, I have also seen that most of the decision makers, sitting in central or state governments are more functioning like enablers and facilitators of as corporates are concerned. They are very, very helpful. 20 years back, I am sorry to say, actually the scene was not so good. Now, most of the people, we interact in our functioning, they are very, very responsive. Any civil servant, whether in state government or federal government, in any ministry and all, we approach, are very, very responsive to the needs of the corporates of the day. And the biggest thing is they are approachable now. You just give them a call or send them a message and all, and promptly you will get the reply. That also is a change, which one has been seeing in the last, 20 years. Now, coming to the main agenda and sharing with you actually my thoughts, about the future boards, there are some pointers actually, which I would like to share with you. I, as a professional, feels that future boards will be probably more broad-based than what we see today. And there are 3 core areas I would like to touch upon where you can find, coming in regularly, in the agenda of all the board meetings. One is cyber and data security, And you will find actually, in future, experts in these three areas functioning on the boards and guiding the corporates, in these three key areas, which are going to be very, very important, let's say 5 years or 10 years down the line. And the number one, as I said, cyber and data security. Number two, General Ahluwalia also touched upon, and that is what everyone is talking about, ESG. And number three, I see, the future boards will probably dwell upon a lot actually, on building up human capital. This is still one area where I feel in 25 years we haven't made actually much progress, in this area of building this human capital. So I personally see that these three areas are going to be very, very keen, very, very important, for any board in future. Now, just taking a minute, on these three things, when we talk about data privacy and protecting actually digital environment, the boards will seek in future assurances from the management on this. As we seek assurances as of now, from the management, from the executives on compliance issues, various laws and all, in going forward, I see, boards seeking assurances from the management, from the MD, whosoever is, running the affairs of the company, on having a very vibrant and effective system of, data security and data management. And inclusion of a cyber security expert will be very, very important. I feel that, in few years, there will be an obligation on all the corporates to design a very clear cyber risk policy framework and to make it public, and the boards will be accountable to that through the execution of, that policy. Coming to ESG and all, there will be, I feel, enhanced focus, by all the boards in future on ESG goals and ensuring actually, achieving those goals and all. This may come by way of, you can say, legislative changes or regulatory changes. There are some corporates now also, like Bhilwara Group, which proactively is acting, on this area. Now, just to share with you one example, that last year, I say in 2021, we had a 46 megawatt, thermal power unit. And for the last 9 months, it has been completely shut. And we have totally moved to green energy. This has been replaced by 72 megawatt, you can say, solar and wind power, plants. We can go for more, but like as Rajasthan government's policy is that 50% we have to buy actually from DISCOM, we are not going for, further investment in that. So it was a call which was taken by the board, being a responsible corporate citizens. Even if it's not a requirement, we need to cut down actually on carbon emission, and we should move towards green energy. When country is actually, setting a very ambitious target, at least we can contribute our bit, for achieving those targets. And so far as ESG is concerned, the accountability and responsibility as of now is probably not 10% what it should be. So when I look at the things 10 years down the line, I feel that boards and the companies will be much more, having accountability for ESG compliances and all. The thing is, instead of this being a regulatory requirement or a legal requirement or something and all, slowly the boards will adopt ESG, as a value system and will move towards that. And boards will take the lead actually putting, ESG framework in all the companies. Coming to the third point, like this is one issue which I have been reading about for the last 45 years. Uh, Human resources accounting in next 20 years, I feel, should become a reality. The most important asset which any corporate can hold is actually, the human assets or human resources. It's unfortunate that the human resource accounting is almost absent, in India. The boards, from the board's point of view, the scope in this particular area as required, by law and by its own admission, it's very, very limited. But going forward, I see that boards will be more conscious of, building up human capital and will work on developing this, nurturing this. Now, what I see is that going forward, there will be increased focus on gender diversity, racial diversity, equality, and inclusion across the company, right from board down to the floor. The other thing is, as boards, sit and start taking note of, this very important issue of building up, human capital, there will be employee happiness index also making way, in the boardroom, and that will be a big plus, for the country as a whole, if we see. Now, before I conclude, two things I want to say. That's my view, looking at the composition and functioning of the boards in future. The boards will be judged more by its impact of its decisions, on society. It's not just profitability or board-centric or company-centric approach, which will be the criteria, for measurement of the performance of a corporate and its board. It will be more focused on measuring, its impact on the society at large, and creation of national and social wealth, not just the corporate wealth. And finally, I see that as we move forward, though it is all there in some of the corporates, we also have it, by the use of technology. And if I pick up especially, the IOT, the Internet of Things and all, that will be making decision making much faster at board level, at corporate level, and even at the, desk level. And there will be very easy access to the qualitative information, for the board, for its members, and for every stakeholder in that corporate. That's my view, on the composition of future boards and all. And thank you very much for giving me this opportunity, of sharing my views on that. Thank you.
Thank you so much, Mr. Sharma, for sharing your insights with us. Next up, ladies and gentlemen, our next speaker is an officer of 2001 batch of Indian Revenue Service. He has a vast experience in the field of taxation, account, and finance. He has worked in various capacities in the income tax department in its different wings, such as investigation, international taxation, headquarters, etc. He has also rendered his services in the Ministry of Finance. During his tenure in the investigation wing, he had conducted various highly successful searches. Please put your hands together for Dr. Sanjay Kumar Lal, IRS, Director Finance, Delhi Transco Limited.
Respected Lieutenant General Shri J.S. Ahluwalia ji, President of the Institute of Directors, respected Shri U.K. Sinha ji, IAS retired and former Chairman SEBI, Shri B.M. Sharma ji, and other distinguished guests present here. A very good afternoon to all of you, sirs. I sincerely thank the Institute of Directors for giving me this opportunity to be here on this forum. I start with a very powerful quote from Mr. Ralph Abernathy. He was Martin Luther King Jr.'s major partner during the civil rights movement. And he actually led the movement after the assassination of Martin Luther King. He said, and I quote, "I do not know what the future may hold, but I know who holds the future." The world is changing at a very fast pace, and it is the corporates actually who through their innovations, technologies, governance, policies, and ultimately through their boards is going to shape the future of tomorrow. Therefore, the boards need to be very diligent. It is important that the boards adopt a policy of growth which is sustainable, environment friendly, and leads to equitable growth in the society. Larry Fink, the founder, chairman, and CEO of BlackRock, the world's largest asset firm management company, has stated that BlackRock would consider sustainability as its core goal in all its investment decisions. Regarding ESG, one of the major challenges and simultaneously responsibilities for the boards today and tomorrow would be to ensure the environmental, social, and corporate governance. In this era, where social media has become such a powerful tool, all activities of the company, all decisions taken, and all policies adopted, envisaged, are available at the click of a button. Twitter, Instagram, WhatsApp, Facebook, and other social media platforms have empowered actually the common citizens across the globe. Every decision taken by any board is analyzed threadbare by investors, analysts, the common man, and a single statement can become viral in a very short time, and it can affect the value of the shares and even the company's future. Therefore, the companies now cannot merely pay lip service to the ESG issues. Their actions would have to meet their words. Boards would have to find resources beyond the company to meet their ESG obligations. Advisory boards, they may be neutrally placed. Their experiences and resourcefulness in the ESG areas could be of critical use for the board of companies. In this context, I would like to quote the example of Volkswagen. They have a sustainability council in which the co-director of the Potsdam Institute of Climate Change is one in the governance structure. Therefore, these advisory groups which may adopt in the board should have an actual important role in the formal governance structure. In Delhi Transco Limited, in which I am one of the directors, and in some of the other companies in which I have been associated as director, such as the Arauli Power Company, we have tried to take decisions keeping the ESG issues in mind. We all know what terrible pollution Delhi faces during the winter months, the smog, etc. It causes severe health hazards. Therefore, in Arauli Power, we have taken a decision to actually procure torrefied and non-torrefied pellets in place of the conventional fuels. Even though the procurement of these torrefied and non-torrefied pellets have increased our energy cost, but the same has to be adopted, keeping the environmental concerns in mind. Though we are presently facing some issues regarding the quantity of material that we require, the number of suppliers, but we are sure that we will overcome these in the near future. We are also in the process of creating our own torrefication plants, which will not only lead to better environmental conditions, lesser pollution, but they would also result in additional income for the farmers. In Delhi Transco Limited also, we have kept these issues in mind, even though we are faced with unprecedented challenges regarding the demand for power. I think it may be of interest to you to know that the peak demand of power in Delhi during the months of, it happens during the month of July. Actually, everybody thinks that it may be in month of May or June, but it happens in the months of July and August. It peaks to about 7,800 megawatts. And we are expecting it to reach about 8,500 megawatt in the next year. And in the next 4 to 5 years, we are expecting a growth in demand of about 5% annually, and this may actually cross 10,000 megawatt in the next 4 to 5 years. Therefore, we have a very complex situation in which the demand varies from about 3,000 megawatt in the winter months to about 8,000 megawatt in the summer months. Therefore, Delhi Transco Limited is required to keep infrastructure ready for operations throughout the entire year to meet our social obligations towards the citizens of Delhi. Therefore, besides business interests, corporates would have to keep their social obligations in mind. We at DTL believe in the philosophy that it is the board's responsibility not only to take care of their shareholders, but also to take care of each of their stakeholders, which in the case of DTL would be each and every citizen of Delhi. I'm also pleased to inform you that despite all this, with good corporate governance and after taking care of each of our shareholders, the profits of Delhi Transco Limited are about 940 crores with a net profit ratio of about 25%. That is NP of 25%. We have achieved this by our policy of converting AIS stations to GIS stations. AIS means air insulated stations, to GIS means gas insulated stations. An air insulated station, a power station may be in about 4 to 5 acres, but a GIS station can be created in about 500 meters. This has resulted in not only longer life of our stations of about 50 years, but also the requirement for space has gone down, resulting in lesser lease rentals, reduction in operation and maintenance charges, and requirement of lesser manpower. This was all the more important for a city like Delhi, where space is such a major constraint. And there are also issues regarding procurement of land. As we all know, procurement of land in Delhi is such a complex issue. There are so many bodies involved that people cannot even fathom. We have to maybe procure land sometimes from MCD, sometimes from NDMC, sometimes from PWD, sometimes from CWD, MES, DDA, etc. The list is endless. We have also emphasized on conversion of our overhead transmission lines to underground cables, and in fact, all further projects are only on underground cabling. As Sharma ji spoke, and General Ahluwalia spoke, digitalization is another critical factor in improving corporate governance, and its role would continue to grow manifold in the coming future. The future boards would need to strategize in this regard. I would like to say that nowhere in the world has the results of digitalization been more surprising than in India. The example of what digitalization has done with regards to railways in India is there for everyone to see. The children in India today hardly can they can hardly understand how reservations used to be done earlier. And if we tell them, they would think that probably it was primeval. Therefore, we also have to be grateful to the previous boards who had actually envisaged such revolutionary changes. The adoption of technology by the ordinary people in India has been phenomenal. When digitalization began, there were a large number of naysayers. People would jokingly ask as to who would actually engage in these digital payments. Would they be the sabji walas, the pan walas, the rickshaw walas, the kirana walas, the panchar walas, or the delivery boys? Now it is exactly, we find these people who are using this payment to the largest extent. India, in fact, leads the world in real-time digital payments, and it is such a pleasant surprise to find out that 40% of all digital transactions happen in India. The onset of Corona had also actually accelerated this. In the last financial year, there were 46 billion transactions amounting to about 85 trillion rupees through digital transactions. Therefore, every board of tomorrow would have to envisage the impact of digitalization and how it could be imbibed and absorbed in tomorrow's future. Even in detail, we have realized the significance of digitalization, and through our SCADA servers and SLDC systems, we can actually monitor the real-time demand of every place in Delhi. We can understand and know which area of Delhi right now is using more power, and in conjunction with the DISCOMs, we can, in real-time basis, change the supply of electricity from one area to another area. So if there is a hot spot, we can divert electricity towards those regions. So the lessons for the future generation is not to underestimate the underlying capacity of the people to learn and adopt to new technologies. Therefore, the boards and the coming boards of tomorrow must clearly understand the necessity and consequences of digitalization in the economy. And it is in this context, boards must realize as to how, through effective utilization of intelligent systems and artificial intelligence, business performances can be accelerated. Therefore, the boards of tomorrow would have to strategize for this. Another important issue is supply chain disruption, as again General J.S. Ahluwalia spoke. In the recent past, because of Corona pandemic and the onset of war in Europe between Russia and Ukraine, the supply chain disruptions had taken place. As we are already seeing, geopolitical equations are changing every day. Therefore, the supply chain disruptions, because of geopolitical changes, will continue to pose a challenge for every sector. The power sector in this case is particularly vulnerable. In Delhi Transco Limited, we have actually experienced it firsthand. A large number of our tenders, contracts were actually delayed, and a large number of other contracts could not be executed. This was because of the huge fluctuations in metal prices and other equipments that we require in the power sector. Therefore, the boards today would have to reflect, assess, learn, and prepare for the future. They would need to dig deeper into sourcing, locations, and understanding the sticky points of supply chain disruptions. Boards would have to ensure resilience in supply chain And this could be through diversified suppliers, manufacturing across diversified geographic locations, and greater visibility of end-to-end supply chains. Therefore, the boards of tomorrow would have to be highly connected to the global marketplace to keep them competitive and resilient to the future exigencies arising out of the geopolitical crises. At the end, to conclude, I would again say, in the words of Ralph Abernethy, that the future is in our hands. And the corporate boards of India today and the globe today hold the key to the future of tomorrow. We have a greater responsibility to leave not only Earth a better place for our children, but also to leave a better Earth than we found when we arrived. Thank you.
Thank you so much, Dr. Lal, for such a well-versed address. And now, ladies and gentlemen, it's time for us to invite our guest of honor. Our guest of honor, ladies and gentlemen, was selected for the Indian Administrative Service in 1976. He served as chairman of Securities and Exchange Board of India for a period of over 6 years between 2011 and 2017. During his stewardship, SEBI is credited with having brought in significant regulatory amendments in areas such as takeover code, foreign portfolio investors, alternate investment funds, corporate governance, and many, many more. For his contribution as chairman SEBI, he was conferred with many awards, including CNBC TV 18 India Business Leader Awards, Outstanding Contribution to Indian Business Award 2014, and Economic Times Business Reformer of the Year Award in 2014, to just name a few. Prior to this, he was the chairman and managing director at UTI Asset Management Company Private Limited. And preceding this, he was the Joint Secretary, Department of Economic Affairs at Ministry of Finance. Please put your hands together and welcome on the dais our guest of honor for the conclave, Mr. U.K. Sinha, retired IAS, board member on multiple boards and former chairman, SEBI. Welcome, sir.
Good evening, everybody. Dr. Ahluwalia, General Ahluwalia, Dr. Lal, Mr. B.M. Sharma, my senior colleagues from the government, invited ladies and guests. I want to congratulate IOD for selecting this proactive and forward-looking subject, the future boards. Normally, whenever we meet discussing about the issues of governance, issues of companies, we talk about what has happened in the past and how things have been handled. But it is really appropriate and desirable that today we are discussing the future of the boards. And when I'm thinking about this subject, my thought goes to what can be the possible areas, possible sources from which we can derive some directions or some indications. In my mind, some of the possible sources could be the owners of the companies, that is the shareholders. It could be, for example, the proxy advisory firms who also report and guide the shareholders. It could be some of the surveys being conducted by the consulting firms or others. It could be also about developments which have been taking place in India and outside India, in the government, in the legal system, the courts, as well as in the regulatory system. When I look at this, 2 or 3 things so far as the owners of the companies are concerned come very clearly to me. One is that over the last 10 years in India and maybe over 2 decades globally, there has been a marked change in the ownership structure of the companies. Earlier, we used to have large number of small investors investing in the companies. Today, the trend is we have a smaller number of investors, which are institutional investors, but they are representing millions and millions of pension holders or millions and millions of life insurance policy holder and things, or sovereign wealth funds and like that. We also see that the amount of investors who are really young compared to the profile about 10, 15, 20 years ago has vastly undergone a change. Today, it is very common for a young professional at the age of 30, or maybe earlier also in some cases, to start thinking of making investments. Those who are past 50 and sitting in this room will perhaps agree with me that that was not the case 20 years ago. So we have young investors and we have institutional investors who are driving the behavior, the conduct of the investors or the shareholders, in not only in India, but all over the world. Now, if we are talking about the young investors, and let us call them millennials because that is the term being used very, very prominently. There was a survey conducted by Fidelity in 2021 regarding millennials, and they found that 87% of them want to work in companies which score very high on ESG parameters. 65% of them want to buy products from companies which are scoring high on ESG, and 43% of them want to make investments only in ESG compliant, or those who are scoring high on ESG, they want to invest in those companies. This percentage of 43% can be compared to 12%, which was the finding about people of the senior age group. So this is a marked change. So a company here or anywhere else in the world cannot ignore these findings because they are your future shareholders. If we look at the survey done by some of the consulting firms or research institutions, I'll mention one or two here. There was one conducted by McKinsey, and this survey points out very clearly that there has been a marked change in the investable money which is going towards funds which are sustainability funds or which are ESG funds. The total institutional money going towards that, in 2021, $140 billion was an accretion to these funds, and in 2022, the total size of these funds, ESG compliant funds, ESG focused funds, is $2.75 trillion. So we can see if, for example, we have people sitting from various corporates here, including Mr. Sharma here, he cannot ignore that this is the profile of the investors who are going to be there. And it is very easy to imagine what is the type of questions they are going to ask you in your AGMs or even otherwise. We also had a survey from the consulting from Russell Reynolds, and they have also found that in all the discussions which are taking, they conducted a survey, and that survey result has come only in the month of September, so this month, current month. And they have found that compared to 2019 and 2022, the number of companies where highest agenda item in the board discussion was, what was the highest agenda item on which discussions took place? And they found that sustainability discussions have been the highest, even closer to the discussions in the board about a strategy. And in 80%, and these are companies which they call gold standard companies globally, and they say that in 80% of the meetings, in 80% of the cases, the discussions were either once or more than once in a year, especially on sustainability issues. So the directors were feeling compelled that this is one area on which they are going to have discussions more frequently than any other possible area. Now let me come to what is happening in the judicial system in various parts of the world. There are several examples, I'll mention only one. In Netherlands, in the case of Royal Dutch Shell, last year, a civil court, mind you, it was not a court dealing with corporate actions or with environmental issues. A civil court decided to entertain a petition that the target given by the company, Royal Dutch Shell, to itself about reduction in the greenhouse gases emission was not satisfactory, and the company should be forced to give itself a much stiffer target. In the first instance, the reaction of all of us in the room would be that this is not the job of a civil court. But imagine the civil court invoked the principle of human rights, and they said that if this question is not addressed satisfactorily and well in time, it will affect the future generations and their human rights. So imagine invoking the principle of human rights, they passed an order and forced the company to have much more stiffer targets. And this has come as a matter of great learning and a surprise to everybody. I'll now give you the example of what is happening in the annual general meetings. And first, what happened in 2021. There is one very famous example of ExxonMobil, a US-based large multinational energy-focused company. There was one investor which had only 0.01% share in the company, 0.01%. But they were able to mobilize more than majority support, including some of the large investors and hedge funds and others, to ensure that the directors being proposed for election by the management are defeated. And they instead proposed their own directors who were selected. So 3 of the directors proposed by the management were defeated. The sponsor of this resolution held only 0.01% in the company. And the directors promoted by this small investor, they were able to get elected. And what was the ground? The ground was that these people who are being proposed by the management have no knowledge, awareness, or exposure of sustainability issues. On this ground, that the company needs, being an energy-focused company, this needs people, which was the point earlier made, that we need people who have knowledge. Various knowledge areas are required in the boards. And that resolution was carried through. In this year, the AGM, we call it AGM seasons. In this year AGM season, one interesting thing which has come about is that there is now more focus, I'm talking of US and UK, there is more focus on personnel matter, HR matters, and I'm happy that HR matters were raised by Mr. Sharma. And there were more focus on this, that what, for example, is the pay ratio of the company. The pay by the CEO or the highest paid employee and the median employee payment, and whether that has gone up or gone down and what is the company doing about it. This year, another new thing which has come up, and I think everybody who has anything to deal with a company or to deal with HR matters has to take note of it, is that they say that, in many companies, there is a culture or a practice of having concealment clauses in their employment contract. They are forced not to disclose it. So in half a dozen cases in the US this time, this AGM season, there has been resolutions passed or contrary resolutions defeated
saying that no company can have a non-disclosure binding on the employees. There cannot be any concealment clauses. So whatever, whenever an employee wants to leave a company and go there, the previous management cannot force him, and he will be free to say what he wants to say about that company. Now let us come to what is happening in the government and in the regulatory field. There are a number of things happening. I think also due to shortage of time, I will deal only with one area which is happening in India with regard to SEBI. SEBI has come out with what is called BRSR, Business Responsibility and Sustainability Reporting Disclosure 2021, 10th of May 2021, this regulation has come. Initially, it was made voluntary, but from this financial year, 22-23, as we talk, whenever we are going to report our company's performance next year, we have to report on BRSR in a very, very serious manner. Now, the difference between the earlier requirement of BRR and BRSR is that while BRR, and in fact, I will encourage IOD or anybody to read and do an analysis of what has been written by maybe selected 10, 20 companies on BRR. And you will discover all the companies claiming that they have done the best possible so far as the business responsibility reporting is concerned, because all it required was some good English. If you write some good English, BRR had no other expectation from you. BRSR has a lot of quantitative data to be disclosed. And these quantitative data, therefore, are verifiable, they are measurable, and they are a standard. So all these have to be disclosed. And also, once it is disclosed next year, how good my company has done versus your company, that comparability also becomes very easy. So it has also got comparability. And the amount of information and the type of information that has to be given, just to give you a flavor of it, you have to provide information about air emission, about nitrogen, sulfur, carbon, and all the carbon related discharge has to be converted into CO2 equivalent and then disclosed in a tonnage basis. You have also to follow what is called the extended producer's responsibility. Now, the one question which we need to address ourselves, that do we have that capacity within our company to actually measure that particular thing? How much water has been discharged per unit of production? These are the requirements per unit of production. How much gas has been, and what type of gas has been discharged per unit of production? Do we have the capacity? And if we don't have the capacity, obviously we will have to engage some experts who can do this. That part is not very difficult. But the point is, once it is reported, it is a public knowledge. And once it is a public knowledge, there are 2-3 possible consequences which I personally feel corporates in India have not been able to analyze and understand its implication. This is my feeling. One is that if you are reporting something which is in public knowledge, at the same time there is some law, some environmental law, or even a regulation or rule under a law where you are non-compliant. It is possible today that your company is non-compliant from the sectoral regulation point of view, but it is between you and the regulator. Maybe you have been able to convince the regulator that, look, directionally we are in the right way, and we are doing this, give us some amount of time, we will do that, and maybe they have given you a special dispensation. Now, once BRSR reporting is in place, anybody, any whistleblower, anybody can now bring it to the notice of the authorities that this company is non-compliant, and here is the publicly stated data. That point perhaps has not been appreciated. Also, under the SEBI LODR regulation, whatever you declare, whatever you disclose, you undertake the veracity of that. You undertake that this is true. If it is not found to be true, any time in the future, 6 months from now or 6 years from now, the company is exposing itself to action, regulatory action. That point has to be understood. And also there is a point that BRSR is the first stage of reporting, which is you are just reporting. This is the first stage. If you look at what is happening in other parts of the world, there are second stage and third stages, which is here you are reporting what is the type of air pollution or what is the type of solid waste disposal or effluents you are undertaking, and this is disclosed, analysts can analyze it and all that. In the US and also in UK, in EU, and now in UK, US is coming through very soon because the discussion paper is out, and before this year is out, US SEC is going to implement it. You have to give a commitment that what is it that you are going to reduce your impact on the environment. If you are creating a climate damage to climate through your operations, what is your plan? In what time frame are you going to do it? So this is the second stage. And once you have given a plan, again you become accountable to that. Because if you have given a plan, you have made a commitment to the regulator, you are exposing yourself, you are going to be exposed to accountability on that particular commitment that you have made. So that commitment will come through. There is a group of very, very reputed institutional investors, and it is headed by Mark Carney, the previous head of the Bank of England. They have, for example, now realized that if they are becoming part of what is called the net zero movement and they make some commitments, then once the SEC, US SEC regulations come in place, then there will be an accountability on them for making voluntary commitments, which are going to be monitored by the US SEC. So you can imagine what is the bind that is going to be created. And the short point I would like to make is that this is an area which cannot be easily ignored now by any corporate. While SEBI has started this, but in other parts of the world, it has become a very, very serious matter. And again, coming to the issue of HR, what it means is that companies have not only got to have good HR resources, good engineering resources to deal with it, but even in their boards, they will have to have people. So the question of diversity in the board, my own feeling is that this diversity or this talent, most of the Indian boards are lacking today. This will have to be implanted there. Otherwise, if we don't do that, we are exposing ourselves to serious action. And I'm sorry I'm talking more and more about SEBI and the regulatory action, not with a view to put any fear in anybody's mind, but just to highlight the fact that while on the one hand the pressure is coming from the investors, institutional investor, young investors, civil courts, the pressure is also from the point of view of the regulators. And so far as the government is concerned, General Ahluwalia was saying that even today huge commitments have been made and commitments have been reiterated by the Prime Minister. So I would say that the future board in this country must take note of what are the requirements of sustainability and take honest attempts to implement them. if they want to become leaders in their fields. Thank you very much for giving me this opportunity. Thank you.
Thank you so much, Mr. Sinha, for making time out of your busy schedule and joining us for this conclave. Now, ladies and gentlemen, it's time for us to release the conclave souvenir. I would like to request our guest of honor and also our other distinguished speakers on the dais to please join him for this special moment that will mark the release of the conclave souvenir. Can we please have it on the stage? This has important activity reports, initiatives, and profile of our partners, supporters, etc. Thank you so much, gentlemen. And now, ladies and gentlemen, moving on to IOD Handbooks for Directors, which is our most sought-after condensed guide on corporate functional area, particularly related to board matters. It is also another publication called Winner's Digest, which we all know carries success stories of IOD's famed Golden Peacock winners. And recently, a new IOD handbook on corporate leadership has been launched. It's a one-of-a-kind book on corporate leadership. We all know that today corporate leaders have to be more agile and resilient than ever before because the business environment is constantly evolving and challenging us. We are very, very grateful to Lieutenant General Surendranath, Vice Chairman IOD and former Chairman UPSC, Vice Chief of Indian Army and also Independent Director Larsen Toubro Limited for his tireless efforts in compiling this book, which is a culmination of an extensive and an in-depth research based on his long years of experience, both in government and in private sector. We are very confident that this book will be of immense use and it's a must-read book for India Inc. May I please request General Nath to join me on stage, please. Before we release the book, we would like to hear it from General Nath, his special remarks about the book and all that has gone into the making of it.
General Ahluwalia and our respected panelists. Good evening, ladies and gentlemen. General Ahluwalia asked me some time back that we should have a book on corporate leadership, a handbook preferably. And he said that we have a large number of other books, handbooks with us on various topics of corporate governance, but we don't have a book on corporate leadership, so can you write some? So I said, is there any corporate leadership book available in the market on corporate leadership? But we couldn't find anyone. So anyway, I said, I'll take on the challenge. And after a lot of research and with my own personal experience of 38 years service in the Army and retiring as Vice Chief of the Army Staff, and also serving with Union Public Service Commission for 7 years, and then being on the board of directors as independent director of Larsen and Toubro, and number of other private limited companies, I was chairman. Then in 2011, IOD invited me to come and join them as vice chairman. So I joined them. Since 2011, I am with them. And I'm very happy that I've had a very satisfying tenure with the Institute of Directors because it has been very educative also. And in this connection, I would like to thank General Ahluwalia and his team for having given me all the support to write this book. I feel this handbook will be useful for all the corporate leaders and more so for the upcoming leaders. And I would only say one thing, that life is a school where experience is our teacher. And as you grow and you gain more experience, your capabilities for leadership, your capabilities for decision making, they also improve considerably. Thank you very much indeed.
Thank you so much, General Nath. Now I request a guest of honor, Mr. UK Sinha, to please release the IOD handbook on corporate leadership. I request our other distinguished speakers to also join him in doing that. Request you to please take your seats as we move on to the felicitation of IOD institutional life members now. We are starting with Ashirwad Pipes Private Limited, which is a fully owned company of Aliaxis, a global leader in advanced fluid management solutions that enable access to water and energy. And I believe we have Mr. Somendra Mishra, Vice President, High Rise Business, here to receive this. We also have Bomber Technologies India Private Limited, which is one of the world's leading manufacturers of process instruments. We have Mr. Shyam A. Varelani, Managing Director, here to receive this. Next up, we have GSAS Microsystems Private Limited, which was started in 2010 and incorporated in 2012 by a team of technical experts adept in identifying and providing end-to-end solutions in the electronics industry in India. We have Mr. Satyanarayan, the Managing Director, to receive this. We would also like to invite Manikaran Power Limited, which is amongst one of the top 3 power trading companies. Formed in it, has been established itself as diversified USD 500 million energy solution conglomerate, having combined experience and expertise of more than a decade. We have Mr. Vineet Kumar receiving the felicitation. Thank you, gentlemen. I request you to please take your seats. Some of the institutional life members were unable to make it to the venue today. Some flights have been delayed because of weather. We will make sure that these felicitations reach the members. These members are ASK Automotive Private Limited, Accordions Business Services LLP, Federal Soft Systems, Gujarat CSR Authority, Gujarat Fluorochemicals Limited, SP Singla Constructions Private Limited, and World Gold Council India Private Limited. I welcome the chair and the speakers for this session and hand it over to the chair to conduct the session on emerging challenges for board leadership in the new economy. Over to you, Mr. Pillai.
Thank you. We have a power-packed panel here, and we are also running 45 minutes behind schedule. So we'll try and catch up some time during this. I just wanted to briefly say that when you look at and you go into companies, there are different types of companies, which you are. You know, we look at company and we say company. It's not a company. It's you have the government PSUs, you have listed companies with professional management, you have private listed companies, promoter, family-based listed companies, sometimes with professional management. and different types of companies, and each company that you are, and you go as a board member, you have to first immediately realize what type of company are you in. And the culture of each one of them is different, as I can tell you from having been in literally all facets of different types of companies. Now, insofar as directors are concerned, your first most important aspect for you is to really look at 4 or 5 aspects in the company. That is, one is you look at, does it have a strategic vision? If so, are you looking at that strategic vision? Where are you? Maybe the strategic vision was 3 years earlier, it was adopted. Where are you in that strategic vision? Which we never do because we are so busy with current things, we never look at what we have done. And then you have what you're looking at. That strategic vision is broken down into annual action plans, budgets, and so on and so forth. So are you providing for that aspect? Then you're really looking at what is the main aspect of what is in the heart of the company is your audit committee, which is really looking at your related party transactions, your intercorporate deposits, and so on, and you're looking at to see in terms of all the regulations, in terms of are you meeting those requirements. Then you have the risk management, which includes cyber security and other risks which are there. And you're trying to see how you analyze the risks for the particular operations that your company is in, and how much can you make sure that risks are minimized. Sometimes you cannot avoid. I was just reminded of when former Chairman SEBI was talking about the US, all the laws and all the regulations which have to be done to comply with A, B, C, D, etc. And I was just casually mentioning, all it requires is Trump to get re-elected as president, and then the entire climate thing will go for a 6. Because he'll walk out of the climate agreement again, and as far as the US companies are concerned, there will be no. So that's a type of risk element, or you want to put it, you can't anticipate that that is coming, and therefore I won't do anything. But this is also something which a lot of American businesses are looking that this is not going to happen, because there is a very strong pro and lobbies. The other aspect is technology adoption. Whether we like it or not, technology is now coming to be. And for companies are you in the entire, are you adopting the technologies which you need to do to make yourself more efficient, more productive, and so on and so forth. And lastly, in one sense is, do you have good internal financial controls? Which is important. Audit committees look at that. But if you don't establish good internal financial controls, whatever you do in one sense, the company will run into problems and create bigger problems for you. And last, of course, is a very simple thing, but many, I just put it as things which are, is to make sure that when you get your board notes, your committee notes, please make sure you get them at least 7 days in advance. All managements don't like, they like to give as least information to the board as possible. That's a universal feature across all types of companies. Or they'll give you too much of information. Agendas in some of the companies I've been working with, board agenda notes are 700 pages, 900 pages, and it'll come 7 days. So you try to see whether you have the time to go through all of that. Then the action taken notes. Your action taken notes are very critical in the what are the decisions of the previous boards, and not just board previous to the one that you had, but maybe sometimes 2 or 3 or 4 boards, the action taken notes you have to see the action that has been taken. That will give you a clue as to how the company is actually doing. And then one aspect for very large companies is that you start to have a very large number of subsidiaries. I'm on the board of, it was mentioned that I'm on multiple boards. I'm not on multiple boards. I'm only on the board of 2 companies, the Adani Ports and Tata International. Each of these have got 30, 40 subsidiaries. And the minutes of the subsidiary companies which come as also as notes to the agenda. They also run into hundreds of pages. Again, you have to make sure that you get effective, actionable summary of what are the key decisions taken in those companies, because otherwise, as a normal board member, you would find it extremely difficult to go through each and every page of. I'm one of those because I have only 2 companies to look after. I go through all the 900 pages there, pick out my notes, etc., and keep following it up at the minutes. But all the other board members all say that, look, just tell us the. So this is where the aspects which I wanted to highlight is key elements which you will have to follow if you really want to be an effective board member. I'll now request my fellow panelists, extremely.
Yeah, fine. Thank you very much, Pillai Sahab. It has been a pleasure for me to be in the midst of all of you here to talk very briefly about this particular subject which has been very, very relevant, very appropriate today, the future boards. I think the opening session went off pretty well. They really touched on very, very important points as to what the board should be concerned about. I'm going to bring in a little bit of SEBI perspective out here, having spent 5 years in SEBI as a whole-time member, and the way the independent director's role is evolving. I'm going to focus on that for a minute or so. First, to start with, the strategy to sustainability. I think this has to be now woven as a part of the mission, vision, values, focus areas, commitments of the company. I mean, it's not going to be a simple lip service to be talking about sustainability. ESG, that is whether it is environmental commitment or the commitment to society or the commitment to governance, it has to be practiced, it has to come through all the kind of transactions that the board is going to be involved in. The board is going to have a regular conversation on these aspects, without which perhaps they cannot goad the company towards that. One important question that the previous group also addressed was that, how are the companies going to be intrinsically interested in this? Is it not a cost guzzler, actually? ESG or sustainability, is it not a cost guzzler? I would say the investors are going to drive this. Future investors, I mean, including even in India today, we are thinking of mutual fund schemes which are going to be ESG friendly, which are going to be ESG funds, where there are quite a few things as far as sharper definition of ESG is concerned, is yet to evolve. But then clearly there is an awareness which is coming in the corporate minds that today ESG is something which cannot be a part of this side table. It's on the main table today. So if you have to attract investors today, whether it is going to be domestic investors or foreign investors, compliance with ESG is going to become very, very essential. So clearly this has to be woven as a part of the entire strategy for the future business. Focus on digitization. I think one can talk hours on together on this. Clearly, I think if you are not digitized, you are going to be completely out of the market. You are going to be priced out of the market. You are going to be not finding a sustenance at all in the market at all. Now, how is the digitization strategy going to evolve? In hardcore manufacturing companies, the question that people ask. Maybe in the financial sector, the digitization can easily catch on. It is catching on. For example, again in the earlier session, people alluded to the way the financial systems are developing in the country. In the payment systems, India is one of the leaders, and the kind of model that India is providing is something which perhaps many of the jurisdictions are trying to emulate today. So when we talk about digitization, even in the area of manufacturing, while the hardcore manufacturing processes will have to be more of automation will have to be brought in, more of kind of information which could be actually assimilated, more of artificial intelligence, more of robotics will continue to play a greater role even in the manufacturing processes. And this is where again the management and the boards will have to do constant conversation as to how to bring this as a part of their regular day-to-day strategy. Cyber security, all of us know, we have gone into a lot of digitization, but then digitization has its own drawbacks, that there could be attacks where actually your entire data is open to the public domain. So today, cyber security has become a part and parcel of an intrinsic strategy that the board has to be involved with. SEBI is actually looking into this in a very big way. They are implementing this in a very big way for the market infrastructure institutions, which are critical as far as the capital market is concerned. Certainly for the listed companies, in their own interest, they will have to evolve their own strategies of cyber security. Let me quickly talk about what the SEBI is concerned about as far as the independent directors are concerned, a futuristic independent directors, and close my address there. Clearly, the independent directors are going to become the pillars of the board in future. From a minority level, they are slowly going on to half the board. Maybe time is not far when the independent directors will occupy maybe even about 60-70% of the board. Their appointment, reappointment processes have been clearly streamlined to ensure that they are not entirely they owe their existence to the promoters and the founders in the organization. There is a kind of a special resolution which has to be passed for the appointments and reappointments, clearly making them that it's not that the promoter-driven independent directors will be any longer in the boards. They will have to have the consent of even the minority shareholders. All of you will be aware that at the time when the consultation paper was floated, sometime in the middle of 2021, there was a two-stage process which was proposed for the appointment of independent directors and reappointment of the independent directors, bringing the minority shareholders to play a greater role in getting the independent directors. I am sure this day is not going to be far off. Perhaps more systems will be brought in where the minority shareholders will have a greater role to play. The independent directors' resignations were causing a lot of problems. The regulator has been attending to it in a very scrupulous way. The independent directors' resignations are now there to be put out in the public domain with very clear reasons as to why he or she is resigning. And clearly, if somebody is going to actually transit from independent director to a whole-time director, the cooling period is going to be very, very severe. And it cannot be they cannot be transiting overnight on this at all. The independent director's job is to ensure the financial propriety of the company, and this is going to play an increasing role as far as shaping the independent directors is concerned. No longer can the independent director say that he doesn't have the knowledge of finance, he or she doesn't have the knowledge of finance, so he should be excused from any financial improprieties which are taking place, which have gone through the board process. I am stressing this point because once you sit as a part of the board and you have approved the balance sheet, the profit and loss account, the cash flow statements and all that, you are expected to play a due diligence role in understanding this, at least a common sense understanding, and ensure that the independent directors have played a good role in ensuring that the funds are properly used. They are, after all, the shareholders' funds. They are not the proprietors or the promoters' funds. Lastly, a word about the audit committee, the related party transactions, and the risk management, to which Mr. Pillai very nicely alluded to. I will close with a remark that even the nomination and remuneration committee, the independent directors will continue to attract a lot more attention, given that what transpired in one of the largest stock exchanges in the country, which has attracted a huge amount of adverse publicity. The nomination remuneration committee, consisting of independent directors, will have to play a very important role in the future, trying to attract talent, trying to ensure that they are abiding by all the laws of the land. Thank you very much.
After all the panelists have spoken, we'll have a small discussion among ourselves and then we'll open up for question and answer.
Thank you to IOD for hosting this very interesting and timely conference. And thank you to all the distinguished guests for attending and my fellow panelists. I'm going to keep it short because a lot has already been said and discussed. So we've covered on all the important trends that are that boards are going to see in the future from all the panelists before me. So what I'm going to do is just touch upon some of the key trends that we are seeing and how that's manifesting itself in the boardroom. So first of all, as you've heard, the role of the independent directors is really getting increasingly complex, and a lot is being demanded, not just of independent directors, but also obviously of managements. And the level of preparedness, engagement, and expertise that is required today of independent directors is actually very, very high. It's almost impossible to find all of that in any one director, and to be able to find enough of that in even 6 directors on a board. So there is a lot of expertise externally that is going to be relied upon, and we're seeing the rise of all of those third-party experts that the boards and managements are going to use. So some of the trends that we are seeing on the boards that I'm involved in, and also what you've heard today, first of all is around all the business disruption that has happened from COVID. So COVID obviously has posed a lot of different challenges, requiring companies to really reinvent themselves in many, many ways, working from home, talent management, supply chain disruptions, health and safety, and all of that has manifested itself in boardroom discussions at multiple levels. Nominating committees are really working hard to figure out how to manage the talent pools and how to train them, keep them engaged. The risks and audit committees are dealing with a host of new issues. Risk committees in particular are dealing with how COVID is impacting and creating all kinds of risks. The business responsibility committees are being asked to deal with all the issues that relate to sustainability, etc. So COVID itself has caused a lot of business disruption. So for example, in one of the boards I'm on, the CF Institute, our business model has got disrupted quite a bit because we couldn't administer exams for a long period of time. And that was the core of our business and a source of revenues. So we've had to figure out how to move exams from paper to computer. So that created a whole need for experts around how we're going to administer exams electronically. And we've had to hire consultants to really investigate and look at what this means for our business going forward. So I'm sure there are lots of other companies that are also having to work on strategy and how to reinvent themselves. So a lot of board discussions around strategy is what we are seeing happening. The second biggest trend that everybody's talked about, which is ESG, sustainability, there we are seeing a lot of pressure from investors. Proxy firms have become very active and investor communities become very active, which means that boards have to really engage a lot more with proxy firms, investors, engage with their stakeholders, and really bring everyone along, and also internally work with management to ensure that companies are actually staying on top of all the sustainability requirements posed both by the regulators as well as by investors and as well as by the laws themselves. So there's a lot of discussion around that. If you look at the number of resolutions, I mean, the rise of activism has happened as well from investors. If you look at the number of resolutions that are getting voted down by investors that the boards have proposed and managements have proposed is rising dramatically. So, so that's another area of discussion that we are seeing happening in boards. In fact, in June, there was a conference in the US that I was attending, which was set specifically for this purpose, which was a group of investors and a group of board members brought together to discuss how and what is required of boards from investors and what boards are looking for from investors. So a two-way dialogue, and we're seeing an increasing rise of that kind of engagement happening. And of course, this has led to also the focus on diversity and inclusion, both at the boardroom as well as at managements. And we've obviously women on boards, diversity in companies, and a whole new way of assessing talent. So the nominating committees are very busy, both looking at those issues within senior leadership in the company, as well as how to bring all these different expertises that are required in a boardroom, and really assessing the skill matrix of the board and figuring out how we're going to bring in new board members and what kind of expertise. So really, really planning, a lot more focus on succession planning around skill matrix and diversity matrices. So that's another third trend that we are seeing in the boardroom and how that's manifesting itself in the discussions. Of course, macro situation is pretty grim, as you know, interest rates, inflation, a lot of other macro conditions are also impacting how companies are dealing with it. Costs are rising, commodity prices have gone up. So companies are not only dealing with costs, they're dealing with supply chain disruptions, they're dealing with Forex. In one of my boards, which is a big exporter and an importer of commodities, we are really being impacted by Forex movements and supply chain disruptions. So that's another topic that is being discussed in the risk management committees, and how that impacts your how the Forex is impacting your earnings. That's being discussed a lot in the audit committees. So those are additional discussions that we are seeing today due to the macro environment and the challenging macro environment that we are in. Another important issue is geopolitics. So geopolitics, as you know, is we are seeing a lot of issues around China. We're seeing a lot of issues, obviously, due to the Russia-Ukraine war. In one of our boards, we've actually had employees in Russia, and how to get them out of there safely, how to have a business continuity plan so that those employees are able to work outside of Russia, and getting them safely moved, and at the same time, the ability for the business to continue to service its customers. And so all of those discussions are, again, something that we are discussing in risk committees at the board, and that is an important, so geopolitics, is quite challenging right now. And then, of course, China and what that means for the rest of the world, and that is particularly impacting a lot of the supply chains and the economy as a whole. And also a lot of companies who have businesses in China, what do they do? And businesses in Russia, what do they do? Do they continue their business as usual? Do they change? So those are all important discussions that boards are also having to face, in addition to all the other things that we have to do. And of course, the regulatory environment keeps on adapting to all of these changes. New laws are formed, new disclosure requirements are being imposed on companies and on boards. So in addition to everything else that we have to do, we also have to keep up with the compliance requirements. So for instance, the whistleblower are becoming more and more active as that law has been put in place, and companies and boards are actually taking it very seriously, which means a lot more legal investigations. So a lot of legal talent is being required by boards as well. So all of these are just a small subset of some of the challenges that we are facing today, but these are important challenges, and boards and the future of boards basically means that the level of expertise and preparedness that we have today that is getting more and more challenged, and we need to get even more engaged and even more prepared, while at the same time, as they say, boards have to keep their, you have to have your fingers out, but still be able to sniff all the problems around that you might see. So there's a lot that has to be done and juggled with, and I think it's going to be interesting times ahead. Others have talked about technology. I'm not going to delve in on that, but technology, obviously, cyber risks and other risks and digitization and what that means for your business models, all of that is also at the same time something we are looking at in the various boards that have been. So I'm going to close it here, and thank you very much.
Topic of today, which is ESG.
So good evening, everybody, and pleasure to be here amongst this conclave, timely conclave organized by IOD, and with my fellow panelists and all of you there. So, ESG is what I'm going to be focusing on. A lot has been discussed and spoken about what is driving this whole focus on ESG. And I would, in fact, say that the focus on ESG today is a bit like how the focus on digital started happening on boards 15 years ago, where boards wanted to do things with a technology and digital focus, but didn't know where to go and what to do, but they wanted to. And I think there's a similar situation today with respect to ESG. And I think in the spirit, again, of what many of my distinguished fellow speakers have spoken about, which is digital, the notes I'm going to be referring to, if I do, are on a digital scribbles, which I have. But just to kind of say that as of now, what we see on ESG in India is largely push, if I may say, push factors. There's the institutional investor push, which Mr. Sinha and all the speakers have spoken about, and they're increasingly looking at ESG as a key criteria for their investment decisions across the globe. And of course, the Indian partners of these firms have the same approach. So, it's happening in India too. Mr. Sinha spoke about the BRSR. There are also today, on the regulatory front, stewardship codes. Think about pension funds, mutual funds, insurance companies. The specific regulators for these industries have stewardship codes which very strongly hardwire ESG into all that they do. So it's really becoming, in a sense, a way of doing business. So what do boards need to do to be able to drive this agenda of ESG? And I want to kind of focus on that. I think the first thing is to acknowledge that this is something which is here to stay. This is something which is going to be a way of organizations to function. And the fact that this strategy around ESG needs to be in place sooner rather than later. So I think the first thing is to, in a sense, embrace the fact that there is something immediate and urgent about what needs to be done on ESG. I think the second aspect of what boards can provide stewardship on is helping organizations marry sustainability and business. The common thing we find in the companies which we kind of work with, and even the boards I'm on, is that business is seen as one different animal, and sustainability is seen as a different kind of an animal. And it almost seems like sustainability is taking away the focus on delivering on business. A lot of organizations tend to see it like that. So I think making sustainability and business come together to help drive the agenda of the triple bottom line is really what boards can help. So when we talk about people, planet, profits, it's at the intersection of these three that the sustainable solutions lie. It's not these in their individual areas. And marrying and getting all this together and making it work together is really the stewardship which the boards can provide and need to provide. I think the third aspect for boards is to acknowledge and recognize that sustainability is not something which will happen overnight. It's a journey. If you look at it through the lens of business, like business is a journey, it has its ups and downs, it has its own challenges and opportunities. Sustainability and ESG will also throw up opportunities and challenges. And it's about setting this process, to begin with, and then treating it on par with how you would treat business. Today, how many boards ask for non-financial metrics or sustainability metrics to be presented to them? The focus is entirely on financial metrics. So getting this going in terms of starting the journey, acknowledging that it's a journey, but having a plan in place, which will then, over the years, 3 years, 5 years, 10 years, lead to the results which you expect to happen from this. Now, this is the kind of stewardship which boards can provide in terms of how they can guide the organization and the boards themselves in terms of moving this agenda forward. But it's equally important for boards to help facilitate setting up of management committees which provide oversight and leadership for the company. Because it's one thing for the boards and the CEOs to say this is something which is important and we need to do things around this. But ultimately, for it to percolate down to the organization, if you really want the benefits from sustainability, if you want the benefits from an ESG strategy, the entire organization has to be kind of marshaled. Whenever there's an important strategic shift or important initiative in the organization, starts from the board, goes down to the leadership, goes down to the organization. And when it goes down to the organization is when it really starts to work, because then everyone in the organization is aligned. So helping set up management committees which will provide that oversight for not just the shepherding the strategy, but also the internal advocacy which is required for this to take root. What do boards themselves need to change in terms of the things which they are doing? And I think the first thing up there is having an ESG committee of the board. Now, ideal situation is to have a separate ESG committee of the board. That may not always be practical, especially if they're large boards and you already have all the regulatory requirements as far as committees are concerned and additional committees. And I think the way to then look at it is that which is the committee which is most suited for ESG to be housed, so to say. So, for example, if you're a manufacturing organization and you're one of those companies who have high or industries which have high ESG risks, like oil and gas or cement or chemicals and categories and businesses like that, then it may well be ESG and the ESG oversight happening by the risk committee, because there's a kind of a synergy there. On the other hand, if there is already a strategy committee of the board, it's a good place for ESG to go and sit there, especially when you're in the strategy formulation phase. And of course, I think something which is becoming, in a sense, a de facto solution, and not a bad solution if you want to start off things, is combining ESG and the CSR committee. Because I think it also kind of dispels the myth that ESG and CSR are the same thing, which is what a lot of people come from. That there is a belief still, even in many boards and senior functionaries and CXO levels in organizations, that just by planting a few trees and doing a few community initiatives, we've done ESG, and that is not ESG. ESG is about then saying, from my business, through my ESG lens, what are the risks and opportunities which the business has? So it's really about arriving at issues which are material to the business. So it could be greenhouse gas emissions, it could be the fact that health and safety of the workers in the supply chain needs to be addressed. It could be that if you're a people-based organization and software organization, tech-focused organizations, it's about the employee engagement and what you're doing for the human capital development. So strategies could be, and focus areas and material areas could be very different depending on which industry you're in. So getting that going with this oversight from the board is critical. 2-3 other areas which the boards can look at when it comes to ESG, and which I think today is probably a handful of companies which are doing, and the first of that is having KPIs around ESG. Again, I'm going to refer to what Mr. Sinha said, and this is my favorite peeve also, which is that a lot of what passes off today as sustainability and ESG is a lot of English with no data. With the BRSR, all that is going to change. So how about linking that to KPIs of the CEOs and the CXOs, and that sets the ball rolling in terms of linking then compensation to ESG and sustainability to really move the agenda forward. Because we know that if you don't have targets, corporates, that I've been in corporates longer than I've been on this side in terms of ESG, if you don't have it linked as a part of your compensation plan, things will not move. So that's something which boards can really drive the agenda on KPIs and linking it to compensation. And of course, looking at, as I said, the risks and opportunities from the ESG lens. And the third, a bit of a softer aspect, not very tangible, but as you're going about this ESG strategy in your board, I think encouraging everyone to take a value chain approach becomes very important. And what do I mean by that? Again, if you're a manufacturing organization, it's not just the health and safety of your employees who are at the manufacturing locations which is important. It's equally important that your contract labor, health and safety across the value chain is addressed, not just for your employees. So I think the whole value chain approach gets you to a place where you make it long-term and sustainable. And lastly, board skill sets. So, again, it's a theme which has been touched upon. When it comes to ESG, how do you get those skill sets in onto the board? Again, if you're at the stage of board expansion or you have the rotation happening of independent directors, that's a good time to get in those skill sets. On the other hand, even with existing board members, how do you kind of create the knowledge through sessions and interactions from experts, which helps the board to then drive this ESG agenda? So those were some of the thoughts on what boards could do tangibly to drive the ESG agenda forward. The need for it, I think, is pretty well established. It's very interesting and very heartening that while the theme is boards of tomorrow, I would guess that about 70 to 80% of the discussion has been around ESG. So that's clearly something which matters. But as in everything, the action is equally important at the boards, and boards play a critical role in driving this agenda. Thank you.
Now request Mr. Anil Kumar. He'll speak on one of the most important aspects in the company, which is actually the HR aspect. People who are the most important.
Good evening, everyone. Thanks to IOD for giving this opportunity to me to come and interact with the eminent persons who are present over here. The topic for today's panel discussion is about the tomorrow's board. But I would like to speak on today's board, because if we say tomorrow's board, that means we are assuming that today's board is perfect, which is not. Why? Coming back to corporate governance, as most of the people understand, that it comes in 21st century by some writing by Bob Tricker, and there was the Cadbury Committee in 1992. But that's not true. Corporate governance is as old as corporation is, because corporate governance arises from separation of ownership and control, which is inherent in the company form of doing the business. As pointed out by Mr. Professor Bob Tricker, 19th century was about the corporation, 20th century was about the management, different theories, processes, concepts of management, and now 21st century is about corporate governance, and the agenda is still unfinished. I'll take some examples about it. People talk about shareholders theory, people talk about stakeholders theory, people talk about ESG and other such requirements. But imagine in best of the companies which on paper got the Golden Peacock Award also. having everything in place, the eminent independent directors on the board, and they did nothing. Everything was happening under their nose. Why this is so? In the recent case of IL and FS, there were so many defaults. Can you imagine a simple thing? Audit committee was in place. The debt equity ratio of the company was 16:1. Anyone having basic understanding about the financial figures can say this company is not sustainable. Why it kept on happening like this? The current ratio of that company was 0.66. I think anyone having some understanding of financial figures, we say that audit committee members have some understanding. We call it financial literacy. This is something basic. But now the things are changing at a rapid pace. There is a disruption everywhere which has been brought by Industry 4.0. Are the companies prepared to take up this challenge? Digitization has become the way of life. If the companies are not adopting it, what will happen? The new and agile competitors will take over those companies. And the old companies which are accustomed to function in the old ways, they will be out of the way. So the role of board of directors, role of independent directors here become very important. To what extent the company is able to digitize its processes. In how many boards this is being discussed, that people only say, okay, digitization is happening. It's happening. But how much time it's going to take? And how much time board is spending in formulating the strategies for digitization of the company? Here comes the role of stakeholders' engagement. The shareholders theory everyone understands. But now, in 2019 at least, one round table happened in the US where 181 CEOs, they expressed, I'll just quote them, the statement of purpose which was given by the round table conference. They say that each of our stakeholders is essential. We commit to deliver value to all of them for the future success of our company, our communities, and our country. Everything comes within this. We say the ESG requirement. I think that it talks about this. It identified 6 sets of stakeholders which a company has to take care of. What the COVID has taught us is that not only the shareholders, all the stakeholders are equally important. During COVID and even after COVID, many boards are concerned about the health status of their employees for the first time. The companies are concerned about providing facilities of vaccination to the employees and their families. The suppliers suddenly have become very important. This has become on account of the disruptions caused by pandemic and now the geopolitical tensions. There is a global supply bottlenecks. So companies are concerned about it. The automobile companies, the chips are not forthcoming. Even the credit card companies, the chips are in shortage. That is why there is so much of delay. So these stakeholders have become very important. That means the role of present board, not only the future board, I am talking about the board of today. It has to have engagement with each and every stakeholder. Each and every stakeholder is important. That becomes very important when it comes to financial institutions. Say for insurance company, the policy holders, these are very important for insurance company. For a bank, depositors are very important. Why should we talk about, what returns we are giving to our shareholder? The protection of interest of depositors is equally important, and I'm sure that most of the boards, most of the directors are conscious of this. Now, when we talk about the board, 2 things are important. One is the composition of the board, and the other thing is the board processes, that what is being discussed in the board. When we say about the composition of the board, the women directors, these are very important. Of course, in India and in other countries, other parts of the world also, the women directors have been inducted to fulfill the statutory requirement. I've done a research paper on it, that what is the impact on the value of the firm with the induction of women directors. But hardly, I would agree, I'm sorry, that 1 or 2 women directors, do you think that they're able to make any difference in the board processes? The only thing is that, of course, that the decorum is there in the board, everything is structured. Unless and until a good number of women directors are present in the board, I'm sure that most of you will agree with me. The critical mass theory is there, which says clearly that to make an impact, at least 3 to 4 women directors out of 10 directors have to be there. Why women directors? Not just for gender equality. Let's be honest about it, because they have different ways of looking at the problem. And the research has proved it, that in case you have the women directors on the board, most of the companies, they desist from taking up the risky projects. Because by nature, oh, I'm sorry. Okay, we are in the habit of taking 1-hour classes. I'm basically a professor. Okay. Another thing is, I'll just take 2 minutes, sir. The reputation management. This is very, very important for any board. Imagine in 2019, on the Facebook, there was one video which was uploaded. The video was the MG Hector car was driven by a donkey. And that became viral, and that was viewed by 2.87 lakh viewers in just 2 hours. So now this is very important role for today's board and more important for tomorrow's board, that they have to be more concerned about reputation management. The risk arises from these kind of posts because, it's a age of digitization, everything can go viral in just a few seconds. There are certain tools, and here artificial intelligence has a role to play. So I think the board have to be conscious in the risk committee that how the reputation of the company is being looked into. That has become very, very important aspect for me. Time is short, otherwise we can go on. Thank you very much, and I'm really grateful to IOD for giving this opportunity to share some of my thoughts with the esteemed gathering here. Thank you very much.
I just thought, Mahalingam, I just thought your brief comments. See, it's nice to talk of ESG, all the requirements which have to be met. UK Sinha also mentioned, unless you meet all this, you will be prosecuted for meeting the norms. The big companies can do it, like they did for GST. What happens to the MSMEs, SMEs, and perhaps even a large number of startups which are coming up? If all of them have to comply with this, would not be, in one sense, a dampener for industry?
Sir, that's a very legitimate question. I would like to put the MSMEs and all in one category, whereas the startups in a different category. The startups continue to depend upon a huge amount of investor money, actually, either coming through the private equity or other routes. And today, the private equity is also going to be focusing on these kinds of hygiene factors like the ESG and all that. So if the startups right from day one, if they are not going to be focused on ESG, perhaps for them to get money over a period of time is going to be very difficult. On MSMEs, I completely agree that while the ESG factor, when you talk about from the environmental factor, is going to be a little more difficult for them, they have the other things to safeguard. The MSMEs employ a lot of people. So are they treating the employees well? Are they treating the community well? Is something on which they have to pay a greater attention compared to the environmental factor, on which I personally feel compared to a large company, a smaller company, the environmental damage that they could inflict is of a much, much lower magnitude. So to that extent, they will get into this orbit, perhaps the last.
I don't want to get into a little controversy. He's also talking of the fact that you want India to go green as much as possible, etc. Do you feel that it's a possibility that in the There's a big movement even against ESG, you know, in the famous cartoon that I'm going to make sure that the that
That's a fantastic comment and question. Uh, the sustainability needs. And I think the issue happens when you look at one versus the other. And that is really the crux of the issue. Now, I have been on the other side, so to say, for many years, and you kind of tend to look at ESG is something which is going to take away time, effort, money. Whereas if you look at it, business through an ESG lens, the solutions actually come. So I don't think the regulators or the government and all the narrative on ESG is wrong. I think it is a matter of that penny drop moment happening. I would in fact go to the extent of saying that even large corporates are not ready. In the work we do with large corporates, they don't have systems for capturing that data, tracking that data, analyzing that data. So when you talk about a grand net zero plan for 2050, actually there are no milestones which lead you there, or set of actions which, you know, when you talk about science-based targets, that's other than a handful of companies that's missing. So I think this challenge also happens that the oversight on this has to come from the top. And in a lot of companies, when they've got a CSO, Chief Sustainability Officer, it tends to be left to that person. And that one person becomes the, you know, karta dharta, so to say, of everything which needs to be done, which doesn't really work, because you need the whole system to be working together. Sorry, I took a long answer to a...
No, Punita, would you think that from the investment community, do they look at this, that my investment may in the long term actually get affected if I go too much on the ESG side?
I think the investor community is also learning about what actually ESG means for them. They are getting pressure from their investors in turn, like all the mutual funds in the US, etc., are getting pressure from CalPERS and all the other institutions and pension funds that invest in them, and they are watching how these investors are actually monitoring the companies that they invest in from an ESG perspective. So there's right now there's a lot of ticking the box going on across lots of parameters. And I think there's a lot of qualitative aspects of ESG that are very hard to monitor because companies are not disclosing on those issues. So I think that's why I mentioned, you know, there was this conference, and there are many, many of these conferences happening where people are learning, both companies, investors, pension funds, are learning from each other as to what ESG means and what and how they should implement it.
Anil, is there something which in the HR division itself, or the NRC looking at training, are you doing it in your company in one sense of getting ESG, inculcated in the DNA of employees?
Okay, I will not share my experience with the LIC because I am not allowed to do that. But yes, HR is very important domain for any company and also for LIC. Now in HR, what is important? That you have to compete with the global players now. And for that, it is very important that they have to be trained into the global practices. And ESG is one of the important aspect of whatever, the employees does or whatever the company is doing. So emphasis has been, let there be exchange of the practices. Let the employees be encouraged to go abroad in some good institution, some good schools like Harvard Business School, have training for some time and learn what are the global practices so that they are able to imbibe them while working in the company. So training becomes very important. The consciousness about ESG will not come just by mission statement or writing something or on the manual. It has to be it has to come from within. And I think training has very important to play so far as HR practices are concerned.
I'll just go back again to what Mr. Sinha mentioned in his speech of business responsibility. Yes. Those parameters which are coming in from next year, therefore all of us will have to comply with that next year. No, I was just mentioning that Mr. Sinha had mentioned about the business responsibility parameters which all companies will have to comply with from next year onwards, and how that's going to, if we are not prepared and we are not really prepared, are we sort of rushing into this without having, normally say we could say this will come into effect from 25, 26 and so on, rather than cause adequate time given.
Sir, actually in these matters, I think there has been a lot of discussion, internal discussion that has been going on within the regulator, plus the discussion with the stakeholders. And Mr. Sinha put it very correctly. I think what was really holding the fort today was good English as far as the business responsibility is concerned. For the right now, what is a 35-page format right now? It talks about the qualitative indicators, it talks about the quantifiable indicators, it talks about just not merely ticking the boxes, it talks about how have you really complied with it. Now, I would still say we are in a stage of comply or explain stage. We have not gone to a stage where it is going to be penalized in a very heavy way. So as long as the public scrutiny is going to take place of the BRSR statement, the companies are going to be actually use the public scrutiny as guardrails for the purpose of greater and greater compliance. So over a period of time, I know that I'm not able to spell out what could be the glide path there, but certainly the glide path would lead to some kind of a penal regime when some of these indicators are not going to be complied.
Thank you so much, Mr. Deshdeepak Verma, for sparing time and being here to chair this panel. I would also like to request Mr. Subodh Rai, President and Chief Ratings Officer, CRISIL Ratings Limited, to please join us on stage as one of the speakers in this session. We're also being joined by co-founder and managing director of ESOP Direct, Mr. Harshu Ghate. I request you to join us, sir. And the last speaker in this session will be Dr. John Matai, Member Secretary, Damodar Valley Corporation, who's with us here. Thank you so much, sir, for joining us. Please join us on stage. To begin this session, I would like to invite onto the dais Mr. Subodh Rai, President and Chief Ratings Officer, CRISIL Ratings Limited, to start the session with his presentation. Hello, sir. So you'll be putting in the presentation? Sorry? Where can I see my presentation? So the presentation will be here on the screen. Okay, all right.
So good evening, everyone, and my sincere gratitude to IOD for inviting me to this conclave. So I'm going to speak on ESG, how we are seeing this from credit rating agencies' lens, what kind of experience we are seeing among the corporates. To give you a flavor, we rate around 7,000 corporates, and at high level, I can tell you that we rate most of the top corporates in India. So quickly, moving on. Just quickly, what all I'm planning to cover is, give you a sense on. Okay, that is difficult to see there. Thank you very much. Sorry, I was just trying to figure out where I can see my PPT, so thank you. So quickly, give you the point that I'm going to cover is one, that ESG clearly is gaining prominence, and India also we are catching up. Corporates are moving in right direction, but what we are seeing currently is that most of the movement is happening among the top corporates. I think mid-corporate and small corporate will have to do some catching up there. As a rating agency, we have started factoring in ESG risk in our assessment because very clearly it impacts the fundraising capability of a corporate. So we are looking at that. And towards the end, quickly, I will discuss some of the things that we are seeing among what larger corporates are doing as far as managing ESG risk is concerned. And you will see some overlap because many of the speaker has already covered some of those points. So I will be efficient there, won't spend much time there. So here's what's happening in the global market. If you look on equity side, in 2020, roughly 40 trillion investment was impacted by ESG consideration. And to give you a flavor, high level, total capitalization of all global market is around 110 trillion. So you can say almost 1/3 of the global investment is driven by ESG consideration. This is a big development as far as investment is concerned. On debt side, moment is somewhat slow. It barely accounts for 2-3%, so we have around 1 trillion. The larger point I want to make is that investors are very serious about ESG performance of a corporate. If you look at the lower side, a survey was done by Bloomberg. They spoke with 800 global leaders. An important point to note is that 71% of them said that eventually no investment decision will be made without considering ESG. So as we go further, ESG risk will become more and more important for the corporates. Coming to India, I think central government has taken a number of steps on ESG. They've identified 169 targets across 17 SDGs. If you look at, recently in Glasgow, around a year back in COP26 meeting, we kind of announced a national goal to reach net zero emission by 2070. On policy side, also a lot of developments are happening. If you look at Ayushman Bharat, that is something that covers 50 crore people in India. It will be one of the largest health protection scheme in India that will have a big impact on the society. Regulators are also catching up. SEBI has come out with the BRSR framework, which will standardize the disclosure, because disclosure is by far the most important part when it comes to ESG. It ensures self-discipline. In a way, it also ensures that larger corporates are assessing their performance on ESG risk. RBI is also they have also joined the bandwagon. And what they've done is they've included social infrastructure and small renewable energy in priority sector lending. So a lot of movement is happening in domestic market also. Quickly on debt issuances on India. So still the base is very small, but definitely we are seeing sharper moments there. Roughly 19.5 billion has been raised so far on ESG side. And some of the large corporates like Adani, IREDA, IRFC, Torrent Power, they are quite active in the market. We have also looked at top 100 company by market capitalization who are in sectors where pollution concerns are there. So there's a second chart. And there if you look at, we looked at the companies from power sector, oil and gas sector, chemical, cement, steel sector. And if you see, picture is a little bit mixed bag. Half of them has clearly identified climate change action. 25% of them has identified their goals of net zero or carbon neutral year, by which year they'll become carbon neutral. All this identification has been done. But still there are kind of 40 top corporates who are not even having proper disclosure. So that's why I said picture is somewhat mixed bag. But important point to note is that still there's no clear regulation on ESG disclosure, because BRSR will become mandatory from 2023 onward. Still, more than half of the corporates are having disclosure. They've identified their goals, and actually they're making good progress on that. Like I said earlier, that ESG risk is becoming very relevant from fundraising standpoint. So as a rating agency, we have taken a note of it. And very clearly, I'll touch upon the framework that we are using it. 3 things we are focusing on. One is disclosure standards. So we are expecting a corporate to make full disclosure as far as ESG parameters are concerned. Second is adoption of goals and strategy. So we expect a corporate to articulate very clearly what is their goal, what do they intend to achieve, say by 2030, 40 in terms of ESG. That is something that is given importance in the ESG assessment. And the third is benchmarking with peer in the same industry. Looking at these 3 things, we assess the ESG performance. And essentially this feeds into financial flexibility of a corporate. which is nothing but their ability to raise fund from either Indian market or from overseas market. And at this juncture, if you have to raise fund from overseas market, you definitely need an ESG rating. So that is making a difference, and I believe that this is something that will also become important in the domestic market. One point I want to highlight is that sector is extremely crucial. Let's say if you are in IT sector or in a banking sector where ESG concerns are not very high, even if your ESG standard is not very high, to an extent your ability to raise fund from the market will not be restricted. But if you're in a sector like power sector, metal and mining, and your ESG standards are also poor, in due course your ability to raise fund from the market will be impacted. So this is something that is becoming serious in the market as fundraising is concerned. Quickly coming to the, on board side, what we are expecting, what we are experiencing and seeing in the market from board and management perspective, very clearly large corporates are embedding their ESG strategy in their business strategy. A lot of seriousness is there. And they have also mechanism of implementing the ESG strategy, monitoring the ESG strategy. I think Ms. Richa spoke about ESG committee being formed in companies. It's a reality. What we have seen is, top companies like Infosys, SDFC, Axis, and Airtel, they have formed their ESG committees. It's something on similar line, what you say, NRC, or you say audit committee, you look at risk committee, ESG committee has been formed to ensure that there is a sharper focus on ESG strategy in a company. And while, one element is forming these committees, having this strategy, the second element is around ensuring that ESG strategy is well implemented. So some of the top companies has already appointed their chief sustainability officers. Companies like ICICI Bank, Aditya Birla Group, Tata Steel, they've appointed their chief, sustainability officer to ensure that implementation of ESG strategy is complete. And I can tell you that what we are hearing from the top corporates is that ESG is a full-time job. It cannot be an additional responsibility given to somebody who's holding other roles as well. So on the strategy side, like I said, you have to formulate ESG strategy. That's extremely crucial. And you have to have a strategic goal. I think some of these points has been discussed quickly, like incentivizing ESG implementation by linking the, key result area of leaders. Unless you link incentives, with this ESG implementation, we'll see challenges. We are already seeing this happening in corporate. So what we have done here is that we studied 100 top corporate by market capitalization. And what we are seeing is that, focus on ESG is very high. There are 60 corporates which are disclosing emission or energy-related target, which is very high to my mind, given the fact there's no such regulation. These are voluntary action from the top corporates. So as far as the risk management is concerned, we are very clearly seeing that, management and board both are focusing on improvement that is being made on ESG side. Companies have started integrating their ESG aspect within the risk management framework. So there is a risk committee, and some of the companies has formed separate ESG risk committee. Some are actually embedding their, ESG risk in overall risk for the enterprise. An important point to note is that out of 100 companies that we have analyzed, 74 corporate has adopted global reporting standard like GRI, etc. So disclosure is pretty high in the group of these top 100 companies. And if I look at, most of the companies who has done debt issuances, they're also taking an external opinion. In nutshell, I think, what we are seeing from rating agency standpoint is that ESG has become very important for the larger corporates. And a lot of time and energy has been invested by the board, by the management to manage ESG-related risk. Important point to, for the board and management will be that a lot of development is happening on ESG side, a lot of development is happening on ESG-related regulation side. It's important to keep on upskilling and improving and do some internal capacity building, because a lot of new information is coming in the market. At times we felt that management was not on the top of all ESG-related information and risk. The second element, I just want to talk about the disclosure. Higher the better, because this is something that we look at very closely. It ensures that there's some self-discipline And it also, and if you look at ESG rating agencies, a lot of them are picking up the data that you disclose, and based on that, they're forming opinion and they're circulating those information to your future investors. So if the disclosure of a company is not good, chances are that your future investor may take a dim view there. Like I said, I mean, ESG performance is going to be critical when it comes to raising the fund, either from Indian market or from overseas market. At this juncture, it is very, very important if you have to raise fund from the overseas market, but we believe in due course, it will become important in Indian market as well. So that's the larger point I wanted to make. Thanks a lot for your attention and time. Thank you very much.
Thank you so much, Mr. Subodh Rai, for the insights that you shared. Moving on further, we would like to invite for the next presentation on stage on employee stock options, corporate governance perspectives and sustainable growth, Mr. Harshu Ghate, co-founder and managing director, ESOP Direct.
Good evening, everyone. While going through the agenda, I could see that while everybody else is talking about ESG, I'm going to make sure that I would be talking of something else. Employee stock options, I'm sure all of you must have come across this phenomena, read across this news. Maybe some of you are beneficiaries of stock options. So I'm not going to go into the depth of what employee stock options are. I think all of us know about it. But what I'm going to cover is, since we are going to be, or we are already on the boards of different companies, how does it, how as a director one would look at if the company is proposing to implement ESOPs. Just to give a context of, what this size of this market is. So it's already being implemented by over 10,000 companies, more than 1,000 listed companies. The value of the options which employees hold now is more than 2 lakh crores rupees, roughly about 25 billion. And the market is growing by about 25–30% when it comes to the number of companies going for this. So from a governance perspective, or even from a regulatory perspective, I think it's large enough market. Most of it is a hidden market because many of these companies are unlisted today. But the moment they get listed, it's going to come up, when employees start encashing their stock options. It has been widely used across all sectors, private, public, listed, unlisted. It has been used by all industrial companies, manufacturing services, financial services, all kinds of companies. One of the top 3 reasons why companies are giving stock options, mostly it is being looked upon as a HR or a compensation angle, where you want to reward employees for their performance. But I think a fairly large number of companies are also doing to share, with the objective of sharing the wealth that is being created. So this is very important from a board point of view as to why you are doing it. Are you doing it just because your competitors are doing it, or are you doing it because your employees want you to do it? Or are you doing it just because it makes good press that you are, giving stock options? It's very important as to the purpose you are doing. Just the previous slide was on the regulation. So there are 4 major regulators who are regulating stock options. One is the SEBI, of course. SEBI has regulations on it for listed companies. Companies Act has regulations for unlisted companies. We have FEMA, which has provisions around if you are giving options to foreign employees, how they would be governed, especially in terms of inflow and outflow of funds. And there is, of course, the Companies Act. So Income Tax Act, obviously, because ESOPs are taxed whenever they are exercised. And I'm sure with all the money that is being generated by employees, the tax authorities are also earning a lot of revenues from taxation. Coming to the corporate governance perspective as to where, whenever it is discussed in the boards, what is it that the boards need to look at? One is, as I said, the purpose, why you are doing this. Are you doing it? And that decision will flow into exactly how you are going to implement it. Are all your employees going to get it? Are only some employees going to get it? What percentage of equity will the shareholders be diluting by giving options? How long will the plan go? Are you doing it as a one-off action where, it's a 25 years of company and we want to give some shares to employees? Is that the objective, or you want to make it a sustainable program which runs year after year? So all of those go into the decision as to why you want to do it, and that decision will result into your subsequent implementation. Allocation of the pool that you have, for example, if you decide 5% of the company shares would be given, how it would be allocated within different hierarchy, senior management, junior management, CXOs, would it go right up to the junior most level, or would it be concentrated? And there is a governance issue here, because if you concentrate it too much at a CXO level, it is likely to be misused, and even the kind of money involved, it can influence the decisions some of the CXOs might take. Repricing is another governance issue. For example, if you issue options at say 100 rupees, and if the market were to fall down, how would you react to, would you reprice the options to the, the fallen market price, or you would keep it at that? And this is a governance issue, because shareholders may not like you repricing the options, whereas employees would want to get it repriced. So this is again a governance issue. Use of secondary shares, many companies don't have enough dilution possible, so they use shares from the market and use it for ESOPs. And again, companies don't have the trust which is managing this secondary shares, don't have funds, so companies have to lend those funds to the trust, etc. So it becomes a governance issue as to how much money should be used for purchase of these shares, and whether that makes sense from the other financial objectives of the company. There have been cases here where SEBI had actually for some time banned use of secondary shares because companies use the trust to basically hold and manipulate the market. Specifically, fortunately, we have not seen so far too much of litigation around this subject. But, in the West, this has been a very hotly litigated subject. And some of the areas where there is a potential risk, in terms of exposure, in terms of governance, is termination of employment. In India, we had a case where CEO was terminated just 2 days before the options vested. And that was because he was going to make a lot of, money from those options, and that was unfair termination. And given the stakes that are now being read about in terms of, what employees can make, this again is a very sensitive topic when it comes to, the board discussions. We have also seen very poor documentation when it comes to, and this again is prone to litigation risk, because employees may come back to the companies with some loose paper which has been given to them, and unless it is sort of ratified by the board, it may not have legal significance, but employees can misuse it. Another topic which is related to this subject is on insider trading. Many of the option holders are also insiders, and their actions and their transactions need to be reported under the regulations. So this again is a very sensitive topic, and you must have read about different press releases on what SEBI is doing in terms of penalizing the employees as well as the boards for non-compliance of insider trading. Those are some of the key topics which I thought are open to, are exposed to risks and corporate governance. I think if time permits, we can take some questions. Thank you.
Thank you so much, sir, for sharing the insights that you did. We'll keep the questions for a little later, since Mr. Kant is already here. Our guest of honors are already here, ladies and gentlemen. So, slight tweak in the program. We will resume this plenary session in a while. We will straight away jump into the IOD Annual Day Ceremony and the felicitation. I request all the speakers to kindly take the seats there so that we can have the stage ready for the felicitation ceremony. Thank you so much to the speakers. We'll again come back into this session, and the questions that you've been holding on, we'll take them very soon. So, ladies and gentlemen, we are now moving towards the much-awaited plenary session, which is the IOD Annual Day Ceremony. To get it kick-started, I would like to request President of Institute of Directors, India, Lieutenant General J.S. Ahluwalia, to please join me on stage. And I would also like to request and extend a very warm welcome to our guest of honors, Mr. Amitabh Kant, retired IAS, India's G20 Sherpa, and Dr. Ajay Bhushan Prasad Pandey, retired IAS Chairman, National Financial Reporting Authority, and former Finance Secretary, Government of India. I request them to please join us on stage. Hello, sir. May I now request our distinguished guests on stage to please receive a welcome flower bouquet on behalf of IOD from our President. And now I request Lieutenant General J.S. Ahluwalia, the President of Institute of Directors, India, to please deliver a welcome address for this very special session.
Mr. Amitabh Kant, ladies and gentlemen, it's a great pleasure to welcome you all the second time today for this special session, which is to give our distinguished fellows. Amitabh Kant himself is our distinguished fellow. So let me just say a few words about IOD before I get into. IOD is a membership-based, not-for-profit, sole independent institute of corporate directors in India. Main role is training, that is training to prepare future corporate directors, keeping them updated for their role all the time. Second is to prepare effective boards for the future, on which we have been discussing for last 3 hours or so. We have to ensure networking of directors, which I mentioned earlier also, through various conferences that we are having in India and abroad, all regional conferences, national conferences, and global conferences. And I mentioned the next global conference is London Global Convention, which is starting from 9th of November for about 4 days, 9th to 12th. So as far as this, each year, the Standing Committee of IOD selects distinguished fellows from the persons of eminence for their outstanding contribution to business, society, and their personal values of ethics, corporate integrity, etc. In fact, the first distinguished fellow of IOD was Dr. APJ Abdul Kalam, in that time as Director DG of DRDO in June 1994. Of course, later on, he was conferred with Bharat Ratna and also rose to be the Honorable President of India. My congratulations to today's honored distinguished fellows who have graced this event. I'm also very grateful to Mr. Amitabh Kant, our distinguished fellow, who managed to spare his valuable time to facilitate and honor these distinguished fellows. Thank you.
For their outstanding contribution to business, public causes, and society at large. For the year 2022, IOD is pleased to announce their distinguished fellows, and we are privileged to felicitate them at this year's conclave. May I request our guest of honors, Mr. Amitabh Kant and Dr. Ajay Bhushan Prasad Pandey, to kindly bestow these honors, starting with the first IOD Distinguished Fellowship for the year 2022 is being conferred upon Mr. Inchetti Srinivas, retired IAS, Chairperson, International Financial Services Center Authority, former Secretary, Ministry of Corporate Affairs, Government of India. Mr. Inchetti Srinivas belongs to the Indian Administrative Service, is a brilliant scholar, a graduate in Economic Honours from University of Delhi and an MBA from UK. As Director, Foreign Investment Promotion Board in the Union Department of Industrial Policy, he was closely associated with liberalization of foreign direct investment policy and industrial policy reforms. As Chairperson, National Pharmaceutical Pricing Authority, he's credited with bringing many critical medicines, including vital medical devices, under prices control to make essential medicines more affordable to common man. So we request you to join us while I give your introduction. You can please be seated, but we'll have you back on the stage just to share a few words with us. As Union Secretary, Corporate Affairs, he played a key role in the implementation of several major economic reforms and laws, including the Insolvency and Bankruptcy Code, which has deeply impacted the borrowing culture in the country and helped banks effectively tackle the problem of non-performing assets. Ladies and gentlemen, he has contributed immensely in development of fields for 4 decades for outstanding public service. The government refuses to let him retire, and we are very, very happy and thankful for him for giving his time and being here to accept this IOD Distinguished Fellowship for the year 2022. Let's hear it up for Mr. Inchetti Srinivas. So I request you to please join me on the dais and share a few words, just brief words of acceptance.
Dignitaries, distinguished guests, ladies and gentlemen, I'm deeply honored and humbled by the decision of the IOD Executive Council to confer this award on me, and with all humility, I accept the Distinguished Fellowship of the IOD. I think I've been very fortunate to have had the opportunity to serve in various capacities in the government of Odisha and the government of India. And I fondly remember my tenure in sports, in corporate affairs, and presently in a new experiment which we are implementing in the country, the International Financial Services Center. I'll speak a few words to just emphasize the importance of governance for which the IOD stands, and how important the role of directors, especially independent directors, is. In the field of sports, I think good governance has been the biggest requirement. You're seeing that our athletes are doing so well, but they could do even much better if we had very strong governance structures and less of infighting. I think in the corporate world also, we are all aware that whether it is ESG or whether it is business and human rights, governance is most important. And when we talk about ESG, I think the G is the key enabler to achieve E and S also.
So all of you are members of this honorable institution, and I'm sure we are all contributing in our own way. Last, I would speak a few words on the IFSC. I don't know how many of you are aware of the International Financial Services Center. It is a separate financial jurisdiction in the country. In India, we have two financial jurisdictions. One is the domestic financial jurisdiction, and one is the international financial jurisdiction. So it is like a foreign territory for that purpose. Recently, we had the privilege of hosting the Honorable Prime Minister, who was with us on 29th of July. And in his address, he made two statements which I feel most aptly describe this project of national importance. He said that in the vision of India's future, or the vision of India's future is closely associated with Gift City. And Gift City is an important gateway to connect India with global opportunities. And if you connect with Gift City, you connect with the whole world. So that is what Gift City is about. It's act as a gateway for global capital inflows into the domestic India and for outbound investment from India. And about the International Financial Services Centers Authority, the PM articulated that IFSCA should be an enabler, should support innovation, and should be a catalyst. So that is, in a way, redefining the role of a regulator. A regulator does not only regulate, but also plays an important role in development. Ladies and gentlemen, with these few words, I once again thank all of you and thank the IOD for this recognition.
And now moving on to the second IOD Distinguished Fellowship for the year 2022. We're very pleased to announce that the next distinguished name is that of Dr. Arun Kumar Mehta, IAS, Chief Secretary, Government of Jammu and Kashmir. Before we have him on stage, just a few words about him. He is an AGMUT cadre officer of the Indian Administrative Services. He has vast administrative experience in both Jammu and Kashmir and the Government of India, where he has displayed an extraordinary acumen as a leader. He's currently the Chief Secretary of Jammu and Kashmir. Since his appointment, he has initiated many good governance initiatives for the development of the state, including security initiatives, which have resulted in an unprecedented flow of tourists last year and an uptake in the number of economic activities in the state. Not just that, he's also served in the state government as Financial Commissioner, also as Principal Secretary in Power Development Department and Commissioner and Secretary Information Technology Department, amongst others, and also served with distinction in Union Government as Additional Secretary, Environment, Forest and Climate Change, and Joint Secretary, Urban Development. Many of his initiatives while serving in the Union Environment Ministry helped the government formulate its strategy for the recent concluded COP26. Ladies and gentlemen, please put your hands together for Dr. Arun Kumar Mehta, Chief Secretary, Government of Jammu and Kashmir. Dr. Arun, we request a few words from your side, please.
General Ahluwalia, Mr. Amitabh Kant and Mr. Pandey and all the dignitaries present here. First of all, it's a great honor to accept this fellowship. And I think the thing I would like to build upon is that good governance can bring about changes which at times can be unbelievable. All of you would be remembering J&K for all wrong things. Today, it's known for the highest ever tourism is this year. The previous highest, and the numbers are very interesting, and I'll come to the point, but the previous highest, both Jammu and Kashmir, Jammu has a lot of religious tourism, was 1.1 crore. We have already crossed 1.5 crore. Previous highest in Kashmir Valley was 13 lakh.
We are already at 21. We are expecting to double the number in 1 year. Today, you will not find a room in Kashmir Valley. Kashmir Valley was known for bands and hartals. Last 1.5 years, we haven't had a single hartal and band. And I would like to further say that J&K was known for a very opaque system of administration. It was virtually, the governance was outsourced to some people with some interests. But since the change happened due to visionary leadership of Honorable Prime Minister, and now J&K is absolutely the most transparent system in the country, and you can check. Everything we do is available on your mobile, and you can check that. Every penny that we release is on your mobile, and you can actually check that here and now. What is the result? Good governance, we were talking about this. Mr. Srinivas mentioned this. 2018-19, we were completing 9,000 projects. Today, we complete more than 51,000 projects in a year. It's 5 times. Our expenditure has not gone up much. So that's the kind of changes that can happen due to very small. J&K was always known to be like a laggard state, and today, in virtually everything, we are in 1 to 5. In agriculture income, we are number 3. Agriculture allied, we are number 5. Under PMJSY, we are number 3. And we have a much smaller state, so our UT. And if we compare with UP, which is much bigger, Azadi Ka Amrit Mahotsav, which is the union territory or state which is highest, which is flag. The Azadi Ka Amrit Mahotsav, we are at more than 25,000. Next is UP, which is 10,000 behind. If that can happen in J&K, probably that sums up the issue that changes can happen. How the change happened, and I'll just like to mention that. We have 220 services which are online now. Last year, J&K was nowhere in online services. We are today 220 services online, and we are number best in the UTs, and we are within the first 5 in the country. It has happened in 1 year. And people always believe that what you do, there was a time in 2016 that people thought that you could see pictures of soldiers being chased away by people. And today, everybody respects them. That's the change that is happening. So Dal is cleaner than ever. Now, any one of you has gone to Srinagar in recent times. Srinagar is number 12th cleanest city in the country today, and it was not heard of. And if you look at any which way, if you look at roads, if you look at COVID management, we never had a bed denial in the entire period of 2020, March starting, until now. We never denied anybody neither ICU bed nor oxygen bed, and this was one of the most well-managed COVID management, and we were probably number 2 in the country in vaccination. So whether it is health, we meet the IPHS standards. And schools, there are just 3 things I would like to say. And how does this happen? It happens because of everybody joins together, and what looks impossible happens in a day. Government employees never filed any property returns. This year online, 3.5 lakh people filed out of 3.80. And that happened within a very short time. Jammu and Srinagar Secretariat is completely online, and I can work on my mobile today. What is the point I'm making? That what IOD stands for, which is good governance and good corporate governance, I think good governance can bring about changes which are unbelievable. And I truly believe this happens when everybody joins together. Today, I honestly feel that because of the enormous changes that are happening, and I've gone around all the 20 districts, the people are accepting the change like never before. During Eid, at least 1.5 lakh people congregate at one place, and you cannot manage them by sheer force. There's no way. And that acceptance today is what we all stand for, and that's where I would leave. I believe that if we do well, and if we are right in our approach in dealing with people, miracles can happen. We have not completed our journey. I believe that there's a long distance to cover. But despite everything, progress is being made, and people are accepting that change. common people are common people. They like to be served well, and that's where it ends. And that's what we should be doing. Thank you very much.
Jammu Kashmir is, of course, universally acknowledged as the heaven on earth, and all the new points that you just mentioned, so make it even more attractive. Thank you so much for joining us, and many congratulations to you. Moving on further, ladies and gentlemen, we are very pleased to announce the next distinguished name to felicitate this evening, and this is of Managing Director and Chief Executive Officer, HPCL Mittal Energy Limited, Mr. Prabh Das. Before we have him on stage, just a few words about him. Mr. Prabh Das has been single-handedly instrumental in establishing HMEL since its inception, including the formation of the pioneering public-private joint venture. He formally joined HMEL in 2008 and has been instrumental in setting up of the Guru Gobind Singh refinery project and its successful operations thereafter. He possesses vast and wide-ranging experience in administration and modern management, having served in Indian administrative services for more than 25 years. He is responsible for leading and managing HMEL and its subsidiaries as Managing Director and SEO. Before that, he served as Joint Secretary in Ministry of Petroleum and Natural Gas from 2003 to 2008, was in charge of the refineries division, and was instrumental in implementing auto fuel policy, strategic storage, and new initiatives in oil diplomacy. Not just that, he also led the transformation of the domestic refining sector, which included strengthening refining capacities, improving refining operations, safety aspects, and introduction of new technologies. He is an outstanding scholar, a brilliant leader. He is a BTech Honours from IIT Kharagpur, completed his Masters in Business Administration from Southern Cross University, Australia. And while serving in the state of Bengal, he did pioneering work in industrialization of backward regions and modern urban planning. This dedication to public service came to the fore when initially the state government refused to let him retire prematurely. Ladies and gentlemen, Institute of Directors is delighted to felicitate Mr. Das with IOD Distinguished Fellowship for the year 2022 for his outstanding contribution to profession and society. Mr. Das, can we please have you on stage?
Thank you, Mr. Ahluwalia, Mr. Amitav Kant, Dr. Pandey, Mr. Ashok Kapoor, and distinguished guests. It's a great honor and privilege to receive this prestigious IOD Distinguished Fellowship for 2022. I thank esteemed Advisory Council of IOD for considering me for this recognition. I feel humble while receiving the prestigious fellowship, which motivates me to work even harder and deliver better. I thank the promoters and shareholders of HMEL for their continuous support and guidance. I also want to thank my family for the way they have supported me throughout. We all understand and acknowledge that in the present time, the role of board has become even more crucial in steering the organization in this very vulnerable and uncertain world, especially when the organization needs to direct their energy towards sustainability, sound corporate governance, and deal with the issues such as climate change, market volatility, cybersecurity, etc. Over the last 30 years, IOD has been apex professional body which has been guiding torch, nurturing directors for future, and has been instrumental in bringing silent revolution in corporate boardrooms. The theme chosen by IOD this year, top trends for building tomorrow's corporate brand, and all the views shared by the respective speakers in this forum provide food for thought, which will definitely upgrade our existing management and corporate governance practices in the next level. Thank you very much.
Distinguished guests, ladies and gentlemen, we are very pleased to announce our next name to felicitate this evening. It is of Vice Admiral Narayan Prasad, Chairman and Managing Director, Mazagon Dock Shipbuilders Limited. Before we have him on stage, just a few words. He's the Chairman and Managing Director of Mazagon Dock Shipbuilders Limited, aptly called Shipbuilder to the nation since 2019. It is one of India's leading defense public sector undertaking shipyard under the Indian Ministry of Defense, manufacturing warships and submarines for the Indian Navy and offshore platforms and associated support vessels for offshore oil drilling. Under his able leadership, it has constructed and delivered a number of state-of-the-art ships equipped with latest systems and weapons, which have accomplished the dual feat of contributing to strengthening maritime security and protecting national interests, as well as a symbol of India's growing maritime prowess and a major milestone in achieving Prime Minister Shri Narendra Modi's vision of Make in India, Make for the World. He's been awarded Ati Vishisht Seva Medal and now Sena Medal for his exceptional service to the Indian Navy. A scholar, a soldier, he is an alumni of Sainik School, National Defense Academy and College of Naval Warfare, Mumbai. He holds a bachelor's degree in Science and Technology from Jawaharlal Nehru University and master's degree in mechanical engineering from University of Pune and master's degree in philosophy, defense and strategic studies from University of Mumbai. The Institute of Directors is delighted to felicitate Vice Admiral Prasad with IOD Distinguished Fellowship for the year 2022 for his outstanding contribution to profession and society. Can we have Vice Admiral Narayan Prasad please join us on stage? Anji. So request you for a few words, please.
A very, very vibrant good evening to all of you. It's indeed a matter of great honor, pride and privilege for me to have been bestowed with this particular honor. Me being a soldier, a little destructive in nature, everybody else talked about how to construct a society and run a company. All my products are largely for the safety of the country and largely destructive in nature. But I will bring a little liveliness in this particular thing. Lieutenant General J.S. Ahluwalia, Mr. Avinav Kansa, IAS, Dr. Arun Kumar Mehta, and Dr. Ajay Bhushan Pandey, sir. Once again, I would just like to drive home that I feel quite humbled to have been selected for this particular fellowship, which is a distinguished nature. And I would also take this opportunity to present some of the credentials of Mazagon Dock Shipbuilders Limited, because many of you may not be aware of this particular ship. As we are aware, Mazagon Dock Shipbuilders Limited is the oldest shipyard in the country, with the inception in 1774, incorporated in 1934, and taken over by the Government of India in 1960. MDL is the only shipyard in India to have built destroyers and two different types of conventional submarines for the Indian Navy, and is also one of the unique shipyards in the world with such diverse range of product such as destroyer, frigates, submarines, corvettes, missile vessels, and so on and so forth. It's a listed public limited company, incorporated and governed under the Companies Act. MDL is also a CPSE under the administrative control of Ministry of Defense, having total workforce of about 6,000 personnel. From the time that it was taken over by the Government of India in 1960, MDL enjoys a reputation of having produced about 800 vessels, including 26 capital warships and 6 submarine, and 631 commercial vessels, 243 of which have been exported to Mexico, France, UK, Iran, Yemen, Mozambique. And besides that, we have also built 63 offshore platforms, 3 process platforms, and 2 jack-up rigs at MDL. Now, this is one of the, as I've told you, it is one of the unique shipyards in the world, and not only in India, with such a diverse range of products across both the segments, commercial shipping and the capital warships. Like other industries, as we are all aware, Mumbai, during the COVID times, which was, I would say, March 2020 onwards, and that is a time when I migrated from Indian Navy as Vice Admiral to take over as Chairman, Managing Director of Majgaon Dock Shipbuilders Limited. Now, that was the COVID period, and the entire facilities were shut down. And Majgaon was one of the hotspot of COVID at that point of time, and it was almost competing with Dharavi in terms of numbers of casualties. When I took over, I had a very, very humongous task, having come from the armed forces background, to get into a management of this kind. But I can share with you that the moment situation normalized, the performance with the shipyard could yield. In the very next year, which is the year 2021, we produced and delivered to the Indian Navy 1 destroyer, which cost about 8,500 crores, and 2 submarines in the same year. Now we are in the year 2022, which is, we have already launched by this particular month 4 in number vessels, 1 submarine, 1 destroyers, and 2 stealth frigates. A stealth frigate is about 7,500 crores, and destroyer is about 8,500 crores, and a submarine is roughly about 5,000 crores. We have a plan to deliver to the Indian Navy 1 destroyer, which can happen any time now, in a week or 10 days, and a submarine by the end of the year. MDL, besides doing all this, has taken a huge areas of responsibility onto his shoulder to create certain national capabilities. In this country, we don't have equipment like gas turbines, diesel engines. We always import controllable shaft propellers. We have taken to ourselves, with the current clarion call of the Prime Minister, that Atmanirbhar Bharat and Make in India initiative is the core point, and it has never been achieved in the country. But I can tell you for sure, since I also enjoy that I have come from the strategic forces background. I was myself the project director for INS Arihant, which is the nuclear submarine, and we have a very, very large amount of indigenous content. I converted that experience of mine into the current program of building ships and submarines which are conventional in nature. And it is nice to see that the current indigenous content, which erstwhile used to be about 30, 35 to 40%, today we have indigenous content of about 75%. Coming back to the scene of a corporate governance, of course, I'm not trained in that particular thing in that manner, but MDL actually justifies a very nice amount of things in corporate governance. We launched the IPO in October 2020. That was just aftermath of the COVID period. And I wasn't very sure how this IPO is going to be sold out. Because once it was a DPSU, second, it was a defense product, and third, the gestation period for construction ranges from 7 to 8 years. At that time, I had an order book of roughly about 60,000 crores. So when I went to the market and I was doing my road shows, I was very, very confused whether all the shares I would be able to sell it out or not. Added on to that, as a Vice Admiral, I had absolutely no background. But then I took on to myself that I will talk to my in all my road shows on video conferencing. I did about 100 of them. And you would be surprised to find that on the day of opening, when I went to the Bombay Stock Exchange, this IPO was oversubscribed by 157.42 times. Which subsequently I was told it is a record by any CPSEs and one of the highest ones in this country. Now, this basically symbolizes that if you just do a straight talking, do not get into a jugglery of playing around with English and confuse the customer, and make your point straight. I talked about that MDL is a debt-free company, which is involved in construction of ships and submarines, has a very, very healthy order book. In future horizon, you have a very, very healthy kind of a order book. We are engaging ourselves in trying to bag one of the biggest defense deal which the country possibly would have. That is to further construct 6 in number conventional submarines which are fitted with the state-of-the-art technology, that is the air-independent propulsion system and lithium-ion batteries. And nobody else in this country has built submarines so far. It is costing about 43,000 crores. Another order book which is there in the horizon is to construct 6 in number new generation destroyer, which is pegged at about 50,000 crores. So I talked to my investor and I told them it is going to be another order book about 1 lakh crores. And people believed on whatever I was talking, and it's all going to happen. And that is exactly what I could see in the market at the Mumbai Stock Exchange when the chairman asked me, Prasad, could you please share with me what is the strategy that you adopted? And I told her I did not know anything about any strategy. I just talked plain, simple English, which was understandable by the public, because I do not know how to juggle around with the words, but I was talking that their investment is going to be absolutely safe. The government, after this investment, expected from the company to raise about 400 crores or something. In the whole bargain, we landed up creating a pool of about 70,000 crores. So that is the... So thank you very much. It's been a real great journey. And for being bestowed with this particular honor, I will certainly keep me pumped up with lots of energy and inertia. And thank you very much once again, sir.
And now, ladies and gentlemen, the keynote address that we all have been waiting for. We're very pleased to have amongst us Mr. Amitabh Kant, retired IAS, India's G20 Sherpa. Before I hand over the dais to him, we all know he was the CEO of Niti Aayog, is a member of Indian Administrative Services, IAS Kerala Cadre 1980 batch. He is the author of Branding India, an Incredible Story, and has edited The Path Ahead, Transformative Ideas for India. Many of you would know that Mr. Kant has been a key driver of the Make in India. Today, what we see as a powerful galvanizing call to action to India's citizens and business leaders, an invitation to potential partners and investors from around the world, now leading towards self-reliant India. He's also been the key force behind Startup India, Incredible India, and God's Own Country initiatives that positioned India and Kerala as leading manufacturing and tourism destinations. He's the chairman of the committee to implement digital payments in India, has worked as CEO, Delhi-Mumbai Industrial Corridor Corporation, and CMD ITDC, and much, much more. He's also the Honored Distinguished Fellowship of IOD in the year 2015, and also the recipient of Golden Peacock Award for Leadership in Economic Transformation in 2017. We are very privileged and honored to have Mr. Kant with us today. Over to you, Mr. Amitabh Kant.
Mr. Ahluwalia, my very distinguished colleague, Mr. Ajay Bhushan Pandey. Let me at the outset compliment the winners of today's IOD Distinguished Fellowship, Mr. Injatish Srinivas, Mr. Mehta, who's Chief Secretary, Jammu and Kashmir, Mr. Prabdas, who's done some remarkable work, and Mr. Narayan Prasad. All four of them have had a very unique career graph, and they've all done remarkably well, and they've done some very, very unique things in the field. They've all men who've delivered on ground. I'm truly aware of what Injati has delivered as Secretary Company Affairs and the remarkable work that he's doing in Gift City. I've worked very closely with Mr. Mehta. He was a Prabhari officer when we were implementing the aspirational districts, and he was one of the most committed professionals I've seen. He has the passion and energy of transforming a state like Jammu and Kashmir. I was in Kashmir as CEO Niti Aayog, and I worked very closely with him. And the transformation that you're seeing in that state is largely because of his leadership. I've known Prabdas for a very, very long time, and he was an outstanding civil servant who decided to quit the service and move over to the private sector, and what a remarkable job he's done in the private sector. One of the most outstanding chief executives in the private sector. He not only established a unique enterprise, but ensured that's a remarkable success story. And Mr. Narayan Prasad, who's done such great work in the Mazgaon dock, and we are all proud of the vast achievements of these very remarkable people. Really unique. They are true nation builders, and they've done, all of them have actually, they're all agents of change. They were all people who've disrupted the status quo in many, many ways. And they are all people of whom we are all proud of. So I think one of the key things about IOD, and I'd like to compliment both General Ahluwalia and Mr. Ashok Kapoor, that the people they select is through a very rigorous process. It's all merit-based, and the people they select are those who've contributed so very significantly to the development and growth of this country. I'm truly delighted to be here. The keynote address will actually be delivered by my colleague, Mr. Ajay Bhushan Pandey, who's had a very, very unique record in service. I've seen him doing several remarkable things. He's the person who worked in the Aadhaar, the UIDAI, and at that point of time, many of these unique public digital infrastructure that we deliver, the individual digital identity, the fast payments. I've seen this remarkable transformation in digital health, the COVID vaccine app. All these things have been possible because of Aadhaar, because we've been able to build digital identity. When I was working in the Kerala, in the fisheries sector of Kerala, and my job was to transform the lives of traditional fishermen. We provided them outboard motors, we gave them new fishing crafts, we gave them outboard motors. But the fishermen were prone to drinking, and therefore it was necessary to open their bank account. It used to take me 8 to 9 months chasing physical, getting physical bank accounts open, chasing bank managers, and know your customers was a nightmare. Today you can open a bank account in less than a minute based on your biometric, in less than a minute. So I've seen this journey of transformation from 9 months to less than a minute. And it's all been possible because of the great work that people like Ajay Bhushan Pandey have done. This whole digital identity was being questioned on grounds of privacy, and actually this came before the Supreme Court. And it was because of his personal arguments. He went and argued on the digital identity and the transformation that it will make in India. And that's why the Supreme Court allowed Aadhaar to go ahead. And because of this Aadhaar, we could do millions and millions of new mobile connections per day. India could become the only country in the world which has everywhere 1.4 billion people have digital identity, 1.4 billion people have bank accounts, 1.4 billion people have today a mobile phone. And therefore, when I was a young officer, a lot of money used to be transferred from center to states to district. There used to be vast amount of leakages. But today, over 600 schemes, we transfer money straight into the bank accounts of individuals. Not a single paisa is leaked. And when the Pradhan Mantri Jan Dhan Yojana started, only 19% of the women had bank accounts. The latest figures which have just come in PMJDY, 59% of the accounts are today owned by women in India. So that is the transformation we've seen. I've not used my I have a number of debit and credit card. I've not used them for 2.5, 3 years almost. All my transactions are through my mobile. All transactions, the only time I used my credit card was when I was in San Francisco about 6 months back, and I had to hire a Uber vehicle and I had to use a credit card. And so you find India has made this huge amount of digital transformation that we could do, 2.5, look at the kind of, we've done about the kind of COVID vaccination that we have done. Actually, we have done vaccination which is 7x of the population of United States. If you look at the digital payments, the latest figure is about 48.6 billion transactions. That's 3x of what China does. That's about 8x of what USA, Europe, Canada do together. So people do not realize the kind of digital leapfrogging, or rather the pole vaulting that India has done in recent times. And it's been an amazing story of transformation on ground. So much of this has been possible because of the vast amount of remarkable work that people who've got awards today and the keynote speaker, Mr. Ajay Bhushan Pandey, have delivered. And I really feel proud that we have such distinguished people in India who've done such remarkable work. Today's subject of discussion is a very fascinating subject. I would have really loved to listen to Mr. Pandey. Unfortunately, at 8:25, we have a call, G20 Sherpa calls with all the Sherpas across the world, so I'll have to rush up for that. But, it's a fascinating subject on the role of the corporate boards. I've been a long-term believer that if India is to grow at high rates, and that's really the challenge for India, to grow at rapid rates of 9 to 10% per annum year after year for 3 decades or more. And this is a real challenge in a fractured world. The world is highly fractured today. There's the Russia-Ukraine war, there's the China-Taiwan crisis, global supply chains are disrupted, we are in a post-COVID era. When Europe and America were growing and expanding, global trade was expanding and growing. Global trade has got disrupted right now. When they were growing and expanding, global debt was growing and expanding in a very huge way. And these are countries which actually industrialized by polluting the world. They absolutely led to polluting the world. India's challenge is to grow at a time when you have geopolitics is a major challenge of the Russia-Ukraine war. G7 is at a huge conflict with another part of the world. You are seeing that global supply chains are massively impacted. You're seeing that global, the dollar will accelerate, it will get strengthened. The Fed will keep raising rates high and therefore to suck out inflation. And that would mean that there'll be a huge impact on the rest of the world. Liquidity will get impacted and therefore flow of debt for companies will get impacted in a big way. And India will have to be the first country in the world to actually industrialize without carbonizing. The first country in the world, and that to my mind is the first country in the world to industrialize without carbonizing is not a challenge, but it's a huge, huge opportunity. It's a huge opportunity to leapfrog in many ways. And therefore, I've been a believer that if India is to grow at high rates, at really high rates, and when Prime Minister talks about Azadi Ka Amrit Mahotsav, he's really talking about transforming India in one generation. In one generation, how do you transform India? That is the challenge. And that would really mean that we become a developed country. And developed country means that per capita income of India is about 2,100 right now. We have to take it to about 12,000 plus, 12,000 plus. So that means that you can't afford to grow at 6%. If you grow at 6% today, your per capita income will, if you grow at 6%, your per capita income will reach about 5,600. If you grow at about 8%, it'll reach about 9,000. But if you look at the compounding power of growth, if you grow at a rate of 9.5 to 10%, you'll be crossing close to about 13,000, 14,000 per capita income. So that's really the compounding power of growth. And therefore, India's challenge is to really grow at rapid rates, and this just cannot be done without the private sector growing and expanding. The government can at best be a facilitator, it should be a catalyst, and government has tried to do is to dismantle a lot of rules, regulation, procedures, and acts, make things simpler and easier. It's jumped up hugely in the ease of doing business. That's what the central government has done. And it has tried to bring in a sense of competition among states. There are vast number of states in India. We are bigger than 25 countries of Europe plus 30,000 kilometers. So we started ranking states. The first year we did it, Gujarat came number 1. Next year we did this, Andhra beat Gujarat. The third year we did it, Telangana beat both Andhra and Gujarat. But the good thing we had seen was that states like Jharkhand and Chhattisgarh, who were 24th and 25th, they had jumped up very substantially to 4th and 5th position. So if the mineral-rich states of India in the eastern part of India start doing well, India will grow rapidly, and that's a big challenge. The other key thing to my mind is that if the private sector has to grow, it's very, very critical that we make things easier and simpler for them, which is what we have tried to do. Bring in greater competitive efficiency so that Indian companies are able to capture the rest of the world. So that is a key role which the corporate boards have to play. And I've been a believer that actually corporate boards have a major role to play if Indian companies have to become global in nature. And this is not feasible without going digital and without going green. The future is you can penetrate global markets only if you go completely digital and only if you go green. This is a huge opportunity. For long in India, we've been getting into the sunset areas of growth. And sunset areas of growth is not the way to grow. The world is growing in completely new areas. It's growing in advanced chemistry cell batteries. It's growing in electric mobility. It's growing in green steel. It's growing. There's a lot of disruption taking place. So it's growing in electronic goods, is growing in mobile telephones, and many of us do not realize that last year the total sales of smart mobile phones was actually higher than the total number of cars sold. Many of us do not realize that an electric company like Tesla, its valuation is more than all the 12 companies. One electric company's valuation is more than the next 12 companies. So valuation and capital will be attracted only by companies. And I'm saying this again, that valuation and capital will be attracted only by companies which go digital and which grow green. And that, to my mind, is the biggest role of corporate boards, to drive Indian companies into sunrise areas of growth, completely new sunrise areas of growth, to drive companies to go completely digital, to drive companies to go completely green. And to my mind, ESG will be critical because sustainability and reporting on ESG will really add a huge amount, and this is a must for every single company. I am a great believer, I'm truly a great believer that boards are great players in bringing transparency. They are really key to bringing in a completely new culture. I am a great believer that boards are the ones who drive growth in the private sector. I'm a great believer that private sector is the key to the growth of India for over a long period of time. And I'm a great believer that corporate boards are really the key to India's growth story in the future. If India is to grow at high rates and really transform itself in the next 3 decades, in the next 2.5 to 3 decades at high rates, the corporate boards will have to be the driver of change and bring in energy, vibrancy, and dynamism to India's growth story. Thank you very much, ladies and gentlemen.
Always a great learning experience to hear valuable insights offered by Mr. Kant. Thank you so much for joining us, sir. We understand that Mr. Amitabh Kant has a commitment to take. Can we please request Lieutenant General Ahluwalia to present him with IOD memento and thank him for his presence here at IOD Directors Conclave. And now, ladies and gentlemen, for the guest of honor, we are pleased to welcome Dr. Ajay Bhushan Prasad Pandey, retired IAS, Chairman, National Financial Reporting Authority and former Finance Secretary, Government of India. Dr. Pandey is an officer of the Indian Administrative Service 1984 batch. He superannuated from the position of Union Finance Secretary and was responsible for preparing as many as 3 annual budgets for the Government of India in the years 2019, 2020 and 2021. He is also known for bringing fundamental tax reforms by introducing faceless assessment and faceless appeal, automated refunds, and having them implemented through extensive use of technology. As the chairman of GSTN, he stabilized the newly introduced GST in India within a short span of 3 years. Prior to that, he was the Chief Executive Officer and Director General at the Unique Identification Authority of India, that's Aadhaar, from September 2015 until October 2019. Under his leadership, he expanded Aadhaar to give biometric-based identity to 120 billion Indians. We are extremely grateful for his presence, the time that he's sparing to be with us. Please welcome on the dais, Mr. Pandey. Welcome, sir.
Lieutenant General Ahluwalia, President of Institute of Directors, and the distinguished audience, it is indeed my great pleasure to be here at this conclave. It is also my pleasure to be here with the doyens of many path-breaking reforms. One of the reformer you just heard, Mr. Amitabh Kant, which our country has witnessed during the last few years. Here, I would also mention here that some of today's, those who have been facilitated with the fellowship, like my colleague Sri Injeti Srinivas, who was very instrumental in effecting some major reforms in the corporate sector, be it IBC, be it many other decriminalization of various offenses. He was very, very closely connected. And what you may not know, that he was also the champion of another very big reforms promoted by him, was the constitution of NFRA, which I am the chairman. So actually, he needs to be facilitated once again by the Institute of Directors for this. I would also like to congratulate Sri Prabh Das, Dr. Arun Mehta, and Admiral Narayan Prasad for their outstanding contribution to the public service. Now, so far as today's topic is concerned, let me give you a little bit of context, which Amitabh Kant just now mentioned, that India, currently we are undergoing a great digital revolution. As a country, we missed industrial revolution because we were not free. But so far as this wave of digital revolution, we are completely in sync with that. And as he mentioned, some of the major reforms carried out during the last 7-8 years, and particularly some of the reforms in which I was also associated, like the digitalization, the program, one of the biggest programs in the world, that is the digital identity that is the Aadhaar. So today, in fact, as an Indian, each one of us should be very proud that this digital identity of this scale is nowhere in the world. 140 crore people all have a digital identity with your full biometrics, all 10 fingerprints, iris, face, everything. And it is very, very difficult to get a duplicate identity. And not only that, through this identity, it is not the identity which you can carry in your pocket, just like many other identities we do. But actually, you can use it to do many digital transactions, to authenticate yourself online and do many things. And in fact, that became the means to achieve, the financial inclusion, digital inclusion. More than 100 crores bank accounts could be opened. The Janadhan accounts, more than 45 crore Janadhan accounts could be opened. And then this whole problem of financial inclusion, the people not having the bank account, the people not having a mobile connections, all those problems have been taken care, not in, very, very long time, in just in the period of 6 to 7 years. I mean, the whole world, whenever I go abroad and when the people talk, people ask, they are truly amazed at this. Another very, very important, the achievement which every Indian should be proud of is the UPI. Because today the people have a digital identity, they have a bank account, they can authenticate, and therefore the UPI layer could be built. The money can be transferred from one person to another through a click of the mobile phone. And today, if you see, if your vegetable vendors, street vendors, everybody has a QR code. And the payment can be made through the QR code. And just, it almost looks like, it almost looked like a science fiction, maybe about 10 years back, 10, 15 years back. But this is something we have done. The digital transactions, this UPI transaction, in 1 month is around 6 to 7 billion transactions. And the total amount of money that is transacted is about 10 lakh crores. If you consider that with the total volume of the, the credit card and others, they are 10 times more than that. And again, I can tell you that nowhere, that has happened. Another very important digitalization has happened in our tax system. The GST was introduced in 2017, and more than 1 crore 25 lakh taxpayers today, they file completely online returns. And this GST, there are a lot of other countries who also have a GST, but our GST is very different. Because our structure is federal, the states also used to earlier have all those indirect taxes, and then the central government. So almost more than 17 taxes, different VAT, excise, service tax, entertainment duty, the host of other taxes, they all were subsumed into one tax. Those taxation used to be earlier levied at a different level. The local bodies level, like entertainment duty, or the VAT at the state level, excise, service tax at the central government level, and all of them were submerged into one. So just imagine that all the state governments and then the central government came together, and then we got this GST. Not only that, we also created a completely online platform on which the entire registration of all the GST dealers would take place. They will file their returns, their entire life cycle will be managed. And today, every month, more than 1,45,000 crores are getting collected through this GST system, and the money gets distributed to all the state governments, again, completely online. So this is the kind of a system. Again, we have studied various countries in the world that, how they have implemented GST. This kind of a system where it is not only the return, each invoice is also being reported. Each invoice in entire GST, because earlier the concept of the return was that return will have an aggregate of the information. But in our GST system, not only you don't need to report the aggregate of your total sales or purchase. What you need to report is only the individual invoices. And then your GST return gets prepared and gets filed, and then you have to make the payment. So this is the kind of a system that has been built, and that is precisely the reason that today, the way it has, because of this technology platform, because of this structure of the GST, even though, I mean, it's a very, very remarkable figure, that during COVID, if you see the total growth, nominal growth that has happened, during the 2 years, is real growth would be around 2%, then you add inflation, you get the normal growth. It will be somewhere around 12-13%. But now the GST has grown during the last 2 years, almost 40 to 45%. So you can understand that total, the tax buoyancy is something like 2. The tax is increasing without increasing the rate of the tax, without doing any raids or intrusion or harassment to the taxpayers. This has the tax collection is double than the normal growth. So same thing you can see, the digitalization, is reflected in the income tax. If you improve your GST, if you improve that, then ultimately it gets reflected in your tax collection system. Now, another advantage that we see of this digitalization is that because now the people are able to transact digitally, the people are having a bank account, they have a mobile phone, they have their identity is secure, they can do transactions. So the retail investors also has grown phenomenally during the last few years. Today, the total number of demat accounts have exceeded 100 million. And this figure used to be around 30-40 million till about 4 or 5 years back. Total number of mutual fund accounts is more than about 120 crores. So this is and still, there is a massive potential to expand it further. And that is where, it is, this particular today's theme, that the top trends for building tomorrow's corporate boards. Because today the necessary building blocks are there. The digital, the tax systems, then demat accounts, the people, financial inclusions, all those building blocks are there. Now the people are, ready to invest. At the same time, because of all this transparency, our FDIs, if you see the figures again, our FDI figures, annually used to be somewhere around, 30 to 40 billions US dollar every year. But now it has gone to the level of something like, 80 to 85 billion dollars. So in this context, the theme is very, very relevant. And I must say that so far as the corporate boards are concerned, and my new organization in which, currently I work in the NFRA, there are a lot of commonalities. How? Because both the corporate boards and the NFRA, they are supposed to promote and protect shareholders' interest and ensure good corporate governance. Now, only difference is that the corporate boards, the directors and the independent directors are inside the company, and we in NFRA are outside the company. But the very important link is the institution of independent statutory auditors. And I will use this occasion to talk a little bit about that. And before I do that, let me give you a little bit of historical evolution of the regulatory oversight over the functioning of the companies over the last 1 century. And I'm going to, the 2 real stories. I will start with a famous case which happened in 1920 in United States of America. It is famously known, or rather infamously known, as Krugers and Toll case. The mastermind of Krugers and Toll fraud was a Swedish engineer called Ivar. He had earned nickname of Savior of Europe, and he was known as a Matchbox King. Reportedly, he controlled 75% of the European and American matchbox market. He also had a telephony company, the famous, which we know, Ericsson. So he had a telephone company also, which had at that time in 1920s about 12 factories in 12 countries. During 1920, the company loaned hundreds of millions of dollars to cash-starved European governments to help them rebuild their war-torn economies. To raise these huge amounts, he set up an American subsidiary and began selling stocks and bonds to US investors. He attracted them by paying dividends up to 20% annually. And how did he do that? What began as this smart and innovative plan to dominate world matchbox market eventually became a Ponzi scheme. Dividends were paid, that 20% dividends were paid out of the capital, and the money from the subsequent loans and bond issuance were used to repay the initial investors. Kruger committed suicide in 1932 in Paris. The financial loss to the investors at that time was estimated to be in the range of US 250 to about $400 million. That case helped garner political support for the passage of the US Securities Act in 1933 and established Security and Exchange Commission in US. The new law required that the companies to publish audited financial statements before selling securities to public, so that the Kruger and Toll type of case do not recur. Another interesting case also happened during the same time in US is called Maxson and Robbins case. The mastermind of this Robbins fraud was Philip Mujica, an Italian immigrant who was then urged by prominent Republicans in 1937 to seek the Republican Party nomination for US president and against the then president, Franklin Roosevelt. Mujica was actually criminal convicted of a fraud twice. He was also a bootlegger. So in 1925, this Mujica, this person, he assumed a fake name called F. Donald Coster. And he also faked his degree called MD, PhD, and used his bootlegging profits to buy a company called Maxson and Robbins. It was a 90-year-old company that sold milk of magnesia. It's a pharmaceutical company, cough syrup. That company still exists today. During the next 20 years, this Mujica alias Coster built a pharmaceutical distribution network. To inflate his reported assets while skimming cash into his own pocket, the Mujica enlisted the help of his 3 younger brothers who were in charge of fictitious sale agency companies. This fraud of 1939, when it got detected, led to a significant change in the procedures. The SEC, the Security and Exchange Commission, recommended that a non-officers members of the client's board, non-officers member, which is like an independent director of the present times, nominate the auditors, and the auditors will be elected by, and they will address their reports to the shareholders. So this is the genesis of institution of statutory directors, statutory auditors, and independent directors. Why we are saying this, and why I am narrating this story. Whenever any major corporate failures takes place, the people, introspect. And one such occasion was when Enron failed in US. Obviously, it was a failure on the part of Enron management. The question then arose that when the failures were brewing, because the failures don't happen overnight, so when the failures were brewing over the years, what were the auditors doing? In that case, the question arose that, and then the question arose that who is going to audit the auditors? And that was the genesis of Sarbanes-Oxley Act, and then the formation of PCAOB, that Public Company Accounting Oversight Board in 2003. Thereafter, the cue was taken by several other countries like UK, Japan, Singapore, Canada, and they all formed similar bodies in their countries. In India, we also had several major corporate failures and scams, starting from Harshad Mehta, Ketan Parikh, Satyam, ILFS, PNB, Nirav Modi. This is the list can go on. The investor and banks and creditors lose thousands of crores of rupees. And these scams actually shake the confidence of people, the investors, the banks, the domestic, retail, the foreign investors. So the question again arises here that when all these scams were happening, where the managements in many cases were actively participating, what were the auditors doing? In India, we had no institution like PCAOB till recently, and who could challenge these external auditors. So in this backdrop, the Section 132 in the Companies Act was incorporated to set up NFRA. However, this section was not notified. Even though the act was passed by the Parliament in 2013, it was not notified till 2018. And only when the few more scams took place, and the NFRA was set up. And as I mentioned, thanks to the crucial role played by Sri Srinivas Injeti, who was the Secretary MCA, and therefore he deserves one more felicitation for this. So that was the story of how the NAFRA, NFRA, in short form we call it NAFRA, and then the institution of independent directors came up. So when I speak to my friends, many of my friends are also the directors in the company, executive directors, non-executive, independent directors. And they are aware of their roles and responsibilities, but it is yet not very clear to them that how they can actually fulfill their responsibilities. Because, and ensure a better corporate governance in their companies. This Schedule 4 is very, very important. In the Schedule 4 of the Companies Act, it says that the independent directors must satisfy themselves on the integrity of the financial information and financial controls and the system of risk management are robust and defensible. The question is that if this is the responsibility on the directors, that they have to satisfy themselves about the integrity of the information that is being presented by the management, the CFO, and then the audit, and then the statutory auditor. So the question is how? And that is where the role of the statutory auditor becomes very, very critical. The role of audit committees also become very critical because the audit committee also consists of majority of the independent directors. And the directors also have the same responsibilities. Also, whenever any major corporate failures or a scam takes place, there is a tendency to brand those corporate failures as a systemic failures. The people say it is a large organization. If some fraud is committed at some level, how will the board or the audit committee or the director or the independent directors will come to know about this? There is also a tendency to justify that these failures were not brought to the notice of or discussed in the board, and therefore the board members cannot be held accountable. And on the other side, when you ask the statutory auditor that what you were doing, then they also would tend to pass the buck by saying that there are millions of transactions in the company and in a large company, and they are not expected to verify each and every transactions. Another very innovative, another very argument that they give, the statutory auditor, that they are not forensic auditors. They are statutory auditors. So this is a classic case of shifting of blames, and when you cannot find anyone to blame, then brand this as a systemic failure. In this context, it is very necessary to look at the roles and responsibilities of the board members, including the independent directors. So I will quote from the Schedule 4 of the Companies Act. It says that the independent director, again, should satisfy themselves on the integrity of the financial information, financial controls, and the risk management, and seek appropriate clarification and amplification of information, and wherever necessary, take and follow appropriate professional advice and opinions of the outside experts at the expense of the company. So therefore, to remain under the impression that the board members are only supposed to look what is being brought by the management in the board meeting, I think, this is not a correct understanding of the law, and therefore it is very, very necessary that all board members become aware of this. Now look at the roles and responsibility of the statutory auditors. Because I just now mentioned, they say that, look, the large number of transactions, I can't go and look, I'm not a forensic auditor. No. So let's see what the law says. In India, we follow the international accounting standards as well as the auditing standards. The Ind AS is mostly the international standards with very little carve out. Our auditing standards is exactly same as the international standards. So now let us look at some very, very critical provisions of the auditing standards. There is a standard of audit 200 and 240. It says that the auditor shall maintain professional skepticism throughout the audit, recognizing the possibility that a material misstatement due to fraud could exist, notwithstanding auditor's past experience of honesty and integrity of the entity's management and those charged with the governance. So basically, this essay casts the responsibility on the auditor, saying that don't take what the management say in the good faith. And it actually asks you to display professional skepticism and presume certain possibility of fraud or misstatement, and then the auditor should question the management with the professional skepticism and ask those questions. Now again, that the argument of the auditor saying that large number of transactions, millions of transactions, how do we verify? So there is a standard of audit 530, which talks about the audit sampling. And I will again quote, because the purpose of sampling is to provide a reasonable basis for the auditor to draw conclusions about the population from which the sample is selected, it is important that the auditor selects a representative sample so that bias is avoided by choosing sample items which have characteristics typical of the population. So basically, the essays require the auditors to draw a representative sample and actually do the verification. In some of the, the inquiry that, in NFRA we conducted, and I wouldn't like to name a company, name any institution here, but I found that large number of loan accounts were there, thousands of loan accounts. And the auditor did not verify any of them. There was no documentation available. Now the question is, and then finally, that led to collapse of one big financial institution. Again, I would not name, I think you may guess. The question was that the auditor did not verify, did not do any sampling, did not, actually went and saw whether the loans were given to the fictitious entity. Because a lot of housing loans were given, and then those people were not existing, the houses were not existing. So if they had followed this, SA 200 or SA 530, all these things could have been detected. It's not a rocket science. It doesn't require the auditors to, necessarily be a forensic auditor to find a misstatement or fraud. Similarly, about the related party transactions. Now, the section 188, because again, the related party transaction, again, the people can say that, those things were not brought by the management or the CFO before the board meeting, what do I do? Similarly, the auditor also could say that they were not brought before us, then how do we verify? Now, let me get to the section 188 of the Companies Act, and again, a standard of SA 540 and Ind AS 24, which prescribe the auditor's responsibilities and management responsibility of the related party transaction. Schedule 4, again, which is more applicable to the independent directors, It requires the independent directors to scrutinize related party transactions and see that they are in the interest of the company and the shareholders. The auditors are required to challenge the management claim that they are at a fair valuation at arm's length. So it is obvious that from these essays and the provisions of the company law, that auditors are duty bound to challenge management reports, management assertions, claims, draw sample transactions for verification, and scrutinize them. They can no more hide behind the excuse that the management did not report the failures, and they took the management in good faith. The failure of auditors to exercise due diligence and professional skepticism are viewed very seriously by even international regulators like PCAOB, FRC. I mean, there are series of judgments of the PCAOB and the FRC where they have held, the big audit firms and for not exercising professional skepticism, not asking the right questions to the management. So that is where it is. So in this context, I came across a very interesting article in the ICAI, Institute of Chartered Accountants Journal, July month, by Y.H. Malegam, the past ICAI president. He's one of the titans of this auditing profession. And he has written that finding fraud can well become a major element of the future audit reforms. There is a growing expectation in the investing public and regulators that the onus should be on the auditor to detect material fraud in all reasonable ways. So while it is admitted that the primary responsibility of the prevention and detection of material fraud must rest with the directors and the management and the internal auditors, there is also an expectation that the auditors should take reasonable action when they suspect irregularities, including fraud, and it should report the work that they perform to conclude that the director's statement regarding the action taken to prevent and detect material frauds are accurate, unquote. So this paragraph actually beautifully sums up the responsibility of the management, the board, and the independent director. You know why I'm saying this? That every 2-3 years, every now and then, if these corporate failures, scams, they take us few years back because it shakes the investors' confidence. I mean, one of the biggest sufferer are our banks, for example. In the sense that today, when I was in the Ministry of Finance, Injeti would also know that we were finding that the banks were reluctant to give credits. Why? Because you never know, because they would trust the auditor's report. On the basis of that, they will take their decision to advance money. But if those auditor reports do not present the true and fair picture of the finance of the company, then what happens to that company and what happens to to their loans. So this is very, very necessary that for ensuring transparency, good governance, inspiring trust among the investors, lenders, creditors, these the auditors and then the board of directors, they should be very, very they should be very, very alive and aware of their responsibilities. So at the end, I would like to sum up that what is required for having a good corporate board, apart from the growth of the company and other aspects. So far as the transparency and good governance is concerned, I have only 3 suggestions. That the board and the directors have to be very careful in appointing statutory auditors. They must ensure that they are truly independent and not conflicted. The Section 144 of the Companies Act, Code of Ethics are mandatory, and they should be followed not only in the letters, but also spirit. We have come across, when we inquire into many of those corporate failures, recent, I wouldn't like to name them, you can guess. We found that the auditors, they were doing the statutory audit, and one of their associates, they were also providing consultancies to either the client or the client's group companies. And just imagine that if that is the situation, then how independent that auditor would be. So therefore, it is the responsibility of the management, the directors, and also particularly the independent directors to ensure that the auditor that they appoint, they are not conflicted, and in case they have appointed the auditor, they should normally not be provided any consultancy services. So this is something, and again, internationally also, this kind of practice have been deprecated by our international counterparts. Now the second suggestion, they empower the auditors to ask questions. Do not feel offended if he asks inconvenient questions. Why? Because he is duty bound to do this. If he doesn't ask those inconvenient questions, if he doesn't show professional skepticism, if he does not challenge the management assertions, then the bodies like us, SEBI or the NFRA will take them to task. So therefore, do not feel offended. Also engage them continuously and deeply during the audit. The audit committee role should not be limited only discussing the auditor's report and approving them in one committee meeting. It requires a deeper and continuous engagement with the auditor. The board and audit committee should ask the auditor to give evidence that they have done the sampling, they have done the verifications, and so on and so. And then the third, use technology, the data analytics and machine learning to identify early warning signals of the financial fissures which may be developing in the company. These steps will actually go a very long way in generating trust, creating early warning signals, preventing failures, frauds, and finally ensuring corporate governance. This will instill trust among the investors and stakeholders in India's capital market and take our economy to the next level. Thank you.
Thank you, Dr. Ajay Bhushan Prasad Pandey, for that address. I request Lieutenant General J.S. Ahluwalia to please present Dr. Pandey with an IOD memento. General Ahluwalia and Dr. Pandey, I request you to please take your seats and be comfortable there. I know we're running behind a schedule. We won't keep you away from dinner more than just a few minutes. Just one last very brief presentation. And to present that on stage, I would like to invite Dr. John Mathai, Member Secretary, Damodar Valley Corporation. This is going to be a special address on sustainable energy solutions. And since we have a paucity of time, Dr. Mathai, I request you to please keep it short and crisp and engaging for our audience. Thank you. Sorry for the time run, sir. Sorry.
A warm good evening to everyone. In fact, I would say that with the presence and with the talk of the dignitaries that we have here, the great fellows of the Institute of Directors who were felicitated today, with their words and presence, this hall has become an intellectually stimulating environment. And I should say that I should restrict my speech only to the theme which has been given to me. That was about creating sustainable energy solutions. So for this, I would like to just state that we, the gold sponsors of this particular event, DVC, Damodar Valley Corporation, is perhaps one of the great examples of how an electricity company can really become a sustainable organization over years. The Damodar Valley Corporation has just completed 75 years of its existence, whereas, the thermal and, the energy solutions, their life cycle is not more than 25 years. So we have come across at a place, at a time where we have completed 75 years. We have created sustainable energy solutions. And to take it forward, the current board of directors in the board of Damodar Valley Corporation, headed by Mr. Ram Naresh Singh sir. The company is taking forward the DVC with this 7,000 megawatt. We have charted out a plan for creating another 8,000 megawatt, which is majorly coming from the renewables. The floating solar, which is going to be perhaps the biggest floating in the country. This is a kind of plan in which the Damodar Valley Corporation, which has established itself as a sustainable electricity corporation, has its plan. Before concluding, I would also like to say that the sustainability of this corporation has also come with the mandate which was given to this corporation by the Government of India, that was creating the socio-economic development of the entire valley. So we have created smiles, we have created improvement of lives in the entire valley, in both the states of Jharkhand as well as West Bengal. With this, I would like to conclude my speech and thank you so much for all the esteemed dignitaries, all the ladies and gentlemen who are present here. Thank you so much.
I won't keep you away from your well-earned dinner. I take it that my speech of thanks is taken as read, as they say in the parliament. We'll publish the whole thing. We'll publish the whole thing in the next issue of DT. Friends, I request you all to please join us for dinner. Thank you.